Welcome, everybody. I'm super happy that everybody's here. With that being said, let me go over the agenda. Let me give you a promise. At the end of this call, that you will know wherever you're at. It doesn't matter if you're sitting at 400, 500, you already have 800, wherever you're at, I'll get you to the 800 club, right? We want to get you to the best credit report possible. You're going to have that knowledge on where to start, how to start to be able to do that. I'm going to give you the resources, the knowledge, and all that stuff. Okay? Within this call, these are the subjects. What are we going to cover today? We're going to cover the players in the game. We're going to cover the application process. That way you guys completely understand from A to C how the application process works so that you can then understand, number 3, what is the difference between fundability and credit score? Like, for example, you may have a fantastic credit score, but you keep seeing denials and you don't freaking know why. And it's super frustrating to keep seeing denials when you have like a 720, 740, and you're like, what the hell is going on, right? So we're going to cover what's the difference between actually being fundable and having a good credit score, right? Or you may also see people with bad credit scores get approved, and you're like, what the hell is that about, right? So that's going to answer that. Number 4, so if credit score is not the thing that is going to make me fundable, what the hell does a fundable person look like? What is that? How do I become one, right? Once you know how to become a fundable person, it's like, okay, how do we structure our business in also well to become fundable, right? We're going to be covering that. And then I'm going to answer the big question about net 30s. I get asked this all the time. Hey, Eddie, what net 30 should I get to build business credit? Blah, blah, blah. Hey, Eddie, how do I build business credit? I'm trying to buy a car. I'm trying to do this. I'm trying to get $250,000 in business credit. How do I do that? What trade lines do I got to sign up for Quill? Right? I get asked that 1,000 times. So again, my promise to you is that by the end of this call, you'll have a fantastic credit score, fantastic credit report. You're going to be able to, if you're trying to buy a house, it's going to give you the roadmap in order to be able to do that. Trying to buy a car, start your business, get business credit, whatever you're trying to achieve with credit, this is going to be the presentation that's going to show you the introduction on what are the correct steps to get there and make that happen. So that's my promise to you guys. Okay. The other promise I'm going to make to you guys is that at the end, there's going to be a secret bonus, something that I've been working within my own company. I created this. What I'm about to reveal to you guys is something that I've been building for my own internal company, for myself, because it has made my life so much easier, okay? I'm going to give you a lot of stuff out today. And then at the end, I will be doing a Q&A. For those OGs that actually know me, that know me very well, that I consider you guys personally friends, you may have heard that I've done master calls and I've gone to other people's credit groups and I've done like free webinars and stuff like that. I've been giving free presentations. I once did a presentation for 7 hours straight about personal credit. Okay, now hopefully this is not going to be a 7-hour recording, but if it has to, just know that I'm your guy. If you guys, we are gonna just sit down here and you can ask me as many questions. I'm not gonna get off this damn recording until I answer every single one of you guys' questions. Okay, now you guys don't need to stay that long, but I'm gonna be here for you. I'm here to provide value. I'm here to be able to answer any question. Okay, so that is my promise to you guys. Okay, so let's get started. Here we go. So the first thing, like I said, the players in the game. You got to understand who is involved. You got to know the chess pieces and the chessboard, right? So you need to learn who's involved in the credit game. And the first and most important person is SpongeBob SquarePants. Okay, SpongeBob SquarePants meaning you guys. You guys are the borrowers. Okay. The borrower is the one who holds basically the most power, because if there was no borrowers, there would be no credit game. There would be no lending. It wouldn't exist. This industry, the finance industry, will cease to exist. This multi-trillion-dollar industry, poof, gone. Okay? So you, the borrower, is the person that is the most important, okay? And so you sitting right now, I'm going to teach you how to become the desirable borrower for the following people. The next player in the game is data collectors, the credit reporting agencies. There's a buttload of these guys, okay? There's so many, and there's new companies popping up all the time. So, but the most popular ones are Experian, Equifax, TransUnion. I'm pretty sure you guys have heard of them at some point in your life. And these are, again, these are the guys that collect data on your credit reports, right? So, and then lastly, third player is creditors and data furnishers. These are the banks, the lenders, the people that are furnishing, that are reporting information, consumer information to the collectors, the data collectors, the credit reporting agencies, okay? Does that make sense? Can y'all get a 1 on the group chat if that makes sense? Not on the question chat, on the group chat. Number 1, let's go. Does that make sense? 2, if it doesn't, like Eddie, I don't know who the borrower is. I don't know who this SpongeBob SquarePants guy. All right. Awesome, awesome. I see 1s. Beautiful. Let's go. All right. Here we go. Next thing. Let's go. Let's deep dive into the credit reporting agencies because I get these questions all the time. I get these misunderstandings. There's so many myths and misunderstanding about who these guys are, how do they work, blah, 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 blah. Right? So credit reporting agencies, we abbreviate them CRA. So if you guys keep seeing CRAs pop up, just know that we're talking about the credit reporting agencies, okay? Again, the most popular ones are Experian, TransUnion, and Equifax. They're also known as credit bureaus. However, that is extremely misleading because when people say a bureau, they're thinking about government entities, okay? So first of all, let me tell you what the hell they're not. They are not government bureaus. They're not, so they're not part of the government, nor do they work for the government, okay? They don't have any, so they don't have any correlation with the government, okay? Now, let me tell you what they actually are. They are companies. Companies like McDonald's, Starbucks, Domino's, Pizza Hut. They are publicly traded companies. You can go to the stock market right now and buy shares of Equifax. Okay? So they're just this random company, and there are data aggregators. What is a data aggregator? Eddie, big words. Calm down. Data aggregators, basically, they just collect data. They're just buying and collecting data of every single American out there, and they're collecting consumer data. How do they make their money? They're a company. How do they make their money? They make their money by collecting all this consumer data and selling it to whoever the hell wants to buy it. Okay. For example, when you submit an application with Chase goes to Experian and goes, hey Experian, I want Eddie's credit report, right? Or I want Edgar's credit report, Dustin, Fernando. I want their credit report. They just applied for credit card right now. Experian is going to charge them 8 cents per credit report. Okay? So that's how they make the money. That's only one way of the forms that they make money, by selling that credit report to the bank, right? Now, I get this asked all the time. Oh, what am I allowed to do? What are they allowed to report? How does this work? I hear about the FCRA, the Fair Credit Reporting Act. The Fair Credit Reporting Act, you guys here, are here to regulate them, not us, okay? The whole point that the law was passed in 1970 was to protect us. The law protects us, the consumer, against their malpractices, okay? So since they are a company, they have to be regulated. They cannot just go randomly collect any piece of information that they want. Before 1970, that's how it was. Before 1970, they could go to they can call your neighbor, be like, hey, neighbor of Jeremy. Hey, how is Jeremy as a neighbor? Oh man, Jeremy every single morning at 6 o'clock walks his dog. He takes a shit. His dog takes a shit in front of my lawn. Super annoying. All right, that's gonna be on the credit report. Hey, Johnny wakes up at 6 a.m., walks his dog. There's gonna be a pile of shit in his neighbor's lawn, right? So they would collect any and all pieces of information, right? So, but now because of the FCRA, they're like, no, you can only report this. You can only do this, and if this happens, like again. The FCRA is here to protect you guys, okay? Now, these guys, like I said, they're not the only ones. There is hundreds of these guys, okay? We don't even know how many there is because there's so many, okay? So let me show you guys 2 more, okay? Let me show you guys 2 more that you guys might not even be aware of. I get a lot of real estate investors here with my own company. Why? Because real estate investors always need more money. Okay, they're always looking for more money. So one of the things that I've seen throughout the years as a funding company, as a business credit expert, is where Lexus Nexus like affects their fundability. Okay, Lexus Nexus is a credit bureau that collects all that information, just like how the other the credit bureaus do, but they also focus on public records. Okay, so for example, real estate transaction and ownership data, liens, judgments, bankruptcy records, professional license information. So I've seen driver licenses in there, historical addresses on file. I've seen insurance. So every single time you renovate your insurance company for your car, it's in there. Your insurance is in there. Okay. Now, how does this affect real estate investors? If you're a real estate investor, put a 1 in the group chat. I want to see who's my real estate investor in here. Who works in real estate? Natalie Brown, let's go. Melissa, beautiful. So Natalie, Melissa, Jonathan, Lexus Nexus, I've seen it where I work with corporate, not corporate, I worked with big real estate investors where they're buying houses that get foreclosed on. They're the buyers, they're the real estate investors that buy the pre-foreclosure, the foreclosures. And then because they bought that property, that foreclosure records goes into their Lexus Nexus. And then when they go get a hard money loan for the next property, the hard money goes like, hey, we just checked your Lexus Nexus. You were foreclosed on your last property. What's going on there? And then they go, and you get denied for credit just because you were in foreclosure, but they don't understand that you were the one buying the foreclosure. You were the one saving their butt, right? So making sure that you have this ready to go, and make sure that either you freeze it, just like how Natalie said on the group chat, or you make sure that it's clean, and you make sure that you do credit repair for Lexus Nexus, and you clean it up, and you make sure that everything is nice and tight. Is going to save you as a real estate investor. Okay. Next one that everybody should definitely know about is called early warning. Okay. What is early warning? All right, I'm going to read it out to you guys. It assists financial institutions. It checks acceptance companies such as retail merchants. So when you pay with a credit card, payment processors, and other financial entities in detecting and preventing fraud associated with bank accounts and payment transactions. They also check records for social security numbers. Okay, so for example, when people buy CPNs, like CPN is a client privacy number, whatever, or like a new social, well, it's not going to match what's on early warning. So so you're most likely going to get denied immediately for credit, or when you eventually do, early warnings is going to pick it up. It's eventually going to track that it's not your social security number, and then it's going to tell the bank, and then they're going to close your account down. It happens all the time. Trust me, I've seen horror stories because of this. So please don't fall for dumb stuff like that. Early warning is a company owned by Bank of America, Truist, Capital One, JP Morgan, PNC Bank, US Bank, and Wells Fargo. Again, why is that? Because the biggest banks decided to get together and create this company because that fraud is such a big issue, right? So they're trying to detect who's out there trying to commit bank fraud, who's trying to commit, right? To commit all these things that is going to it's going to hurt them in the long run. Okay, so that's enough with the players. And does that make sense to you guys? Everything makes sense with the players. We got early warnings, Lexus Nexus, and the 3 major credit bureaus. Okay, so let's go with the application process. All right, we got my man Gary V over here to tell us how it is. Okay, here we go. How does the application process work? It's very straightforward, okay? So you're sitting down on your computer and you're like, I'm gonna go to chase.com right now and apply for a credit card. And then you apply for the credit card and the little circle happens for 30 seconds, and then you either get approved and review or denied. And you're wondering like, how did they approve me for $35,000 on the spot? That makes no sense. Or like, hey, how did they deny me? Like, isn't that crazy? Isn't that crazy? Right? So this is how it works. When you submit a credit application online, or just when you submit an application in general, the very first question that any bank asks is, who the hell is this person? Who just applied? Right? What are they trying to do? They're trying to verify this person. It's like, who can we figure out who this person is, and can we verify that the person behind the computer and under this IP address is actually who they claim they are, right? Why? because they're trying to prevent fraud. Fraud is their number one risk as a lender, okay? So how do they do this? They do this by comparing and contrasting the personal information that you submitted on the credit application and comparing it to what's on the credit report, okay? And this is why I tell you guys, ladies and gentlemen, that the personal information section in your credit report is the most important section of your entire credit report. It doesn't even affect your credit score, but it is the most important. Why is that? Because when they're doing, they're comparing the personal information apples to the credit report. Okay, they're trying to see if it matches. If it doesn't match, if you have too many addresses there or inconsistent, like variations of your addresses, if you have variations of your names, there it's going to bring little red flags like, oh, that doesn't match, that one doesn't match. Eventually, the software is going to say, hey, there's too many inaccuracies, too many inconsistencies. I would rather just deny this application than to go with it and approve them for something, and it turns out it was a fraudulent application. Okay, so I've seen it all the time. I've seen it all the time when people with like phenomenal credit scores get denied all the time because they moved and they forgot to update their accounts. They forgot to update it with the credit bureaus. They forgot to clean all the accounts. People in the military, you guys move from place to place all the time. I actually have personal experience with this. My father, Mexican American, he has 3 first names, 2 middle names, and 2 last names. Crazy. I don't know why. I don't know why he decided to do that, but that's what he has. Okay, and oh my God, when I started his credit journey, he already had like a mortgage and an auto loan and everything, and I think 1 credit card for like $2,000. But when I started learning this and I started like, oh my God, let me build his credit up, he already had like a 740, but it was a very thin profile. When I went to apply for Chase, my mom was getting $20,000 credit cards and he was getting nothing. He was getting denied left and right. And I was like, what the hell is going on? They have the exact same credit profile because they're co-borrows on everything. I went to his credit report, look at his naming section, 15 name variations, you guys. I cleaned those up in 24 hours, applied the very next day, instant approvals for $20,000 credit cards. Instantly, just by cleaning the personal information section. That's it. That's it. That is simple. That could be the simplest thing that you can do in order to ensure that you are not seen as someone who is like a fraudulent application. Okay. So if you are having a fantastic credit score, it is not going through, check this ASAP. Okay. The second question that the bank asks is, okay, we found out this person is Fernando. Okay, Fernando applied. Yep, we verified his credit report. It looks fantastic. Okay, now they're finally going to take a look at the credit report, right, and analyze it. But the second question they're going to ask is, do we know this guy? Do we know Fernando? Does Fernando bank with us? Have we ever done business with Fernando before, right? And there's only 2 options to this question. Either yes, we know this person, we have a relationship with this person, or number 2, we don't know this person. We've never heard of this person before. We don't have a relationship with this guy, right? The most favorable way is if you do have a relationship, obviously. You're gonna lend to, like, for example, if Fernando, his homie, comes up to me and like, hey bro, I need to borrow $100, I'll pay you back tomorrow. Fernando is probably going to be like, yeah, you're my homie, you're my brother, I trust you, here's $100, you pay me back tomorrow. If a homeless man comes knocking on his house at 9 p.m. and asks to borrow $100, he's going to be like, dog, I don't know you, I don't know who you are, like, I'm not going to let you borrow money, right? So same thing with the banks. The banks want to lend money to people who already like let them borrow money, people who already have a relationship with them, right? For many years, they know their behaviors, they can trust them. Right? So how does the bank actually do that? Right? The bank has something called internal performance status score. Okay. They are calculating what is your relationship with them. And they have so many metrics to track this, like tons. We can talk about it for like hours. Okay. But it's basically like, how many accounts do you have? Have you ever overdrawn your bank account? Like, have you ever gone negative? Like, have you gone negative dollars on your checking account? That is bad, right? How much money, like in general, is there on average on your bank accounts? How many bank accounts do you have? How many credit cards do you have? Do you have auto loans, mortgages? The more credit products and more experience and years with them, the better that score is going to be, Okay, so when you get approved, it's gonna, or when they analyze your credit report and they analyze to approve you or deny you, they're gonna take all these into consideration. So maybe if you're, this is why when people would really like kind of like in the 680, 650 credit scores, they still get amazing credit approvals because with that one financial institution, they've been with them for like 10 years, they have money in that account, they have a few products, they actually know the people there. And this is why they can see favorable terms. And this is why relationships are so important. Okay. Now, when you don't have a relationship, they're going to judge you way more harshly on your credit report. And every single thing that is not perfect, they're just going to criticize so much harder because they have to. They don't know you, right? So this is why having that relationship is way more important, is very, very essential. Okay. Please press 1 on the group chat if that makes sense, if that resonates, if that is finally giving you guys some mental clarity, put 1 on the group chat. If not, let's put a 2. Let's see, once, let's go. Let's go. Super happy to make sure that you guys understand that. Okay, now let's take a deep dive. That is the first 2 questions. Now let's take a deep dive into the overall process. All right, we got our boy Fernando, like I was telling you guys earlier. Fernando's right here. He submits a credit application with this bank over here. The bank goes, okay, I got this credit application. I'm going to go to the credit bureaus. We're going to go pull the credit bureaus. Now, the bank may just choose 1 credit bureau, 2 credit bureaus, all 3 credit bureaus, right? To be able to pull and then get the reports and analyze it, right? So the reports go back to over here. Now, sometimes, actually a lot of the times, the bank may also ask for other credit reporting agencies, other databases, right? Like I said, early warnings, Lexus Nexus. They may want to go and check, but however, like when you submit the application, they may like, hey, Fernando, look, everything is looking kind of great, but I still have some questions over here. Can I get access to this, and they're going to be taking a look at other things. So for example, if you're a business, they might want to take a look at your books, like, hey, you applied for a $100,000 line of credit. I want to make sure that let me take a look at your AR log and your AP log. Let's take a look at that. Let's look at your balance sheets, right? So they may want to have access to your QuickBooks. Hey, maybe they want to have access to your payroll. Like, hey, if you're telling me that you need a line of credit of $25,000 to pay payroll for payroll purposes, okay, well, let's take a look at that, right? They may want to have access to that. The other 2 things that you guys gotta know that are like big factors are the following two things. A lot of people don't know this one. There's this company or software called FICO Falcon Intelligence Network. It is owned by FICO, the company that gives you your credit score. What is this? What is this software? What this software does, it has a relationship with 9,000 financial lenders in the United States. Okay, 9,000. So Chase, Bank of America, Wells Fargo, like every single top bank that you can possibly think, they have a relationship with them. What they do is that every single time someone submits a credit application to one of those 9,000 lenders, that bank sends that application over to FICO Falcon. They just send it over. What FICO Falcon does, it keeps track of every single thing that you input on that credit application throughout your lifetime. Why is that very important to know? Because this is where gurus on the internet tell you, oh, you're making $30,000 a year. Yeah, just put like you're making $1 billion, right? Yeah, just put any fucking number in there, right? Well, that's what's wrong with that is that, let's say a month ago, you were looking at Chase and you were like, oh, I want to apply for this credit card, and you make $60,000 a year. And you put $60,000. Now that application was sent to FICO Falcon. Let's say a month later, you want to go to Bank of America and apply for another credit card. And then on that credit card, you submit, oh, well, hey, Chase denied me because I was making too little money. Well, how about I make a gajillion dollars on my credit application? Well, when that application gets sent to FICO Falcon would be like, well, a month ago, this person was making $60,000 and now he's making a gajillion dollars. That makes no financial sense. That just doesn't make, like, I understand if he made a little bit more money over the, the holiday, but like, that makes no fucking sense. We're going to send that application back to Bank of America and be like, hey, this doesn't match. You should deny that. boom, it's a denial. All right, so you guys got to be very careful. Now, if you guys are in a lower payment structure, if you want to, you guys need to increase your income like just normal people get raises, people start increasing their own income, and you cannot just lie. So this is where within our own company, we ask people, when was the last time you ever applied? What is the usually number that you put? How much can you actually prove? What is your household income? We ask all these questions so that we can take a gauge, because there's certain applications that say, what's your estimated revenue that you're going to make this year? What is your actual income? What is your household income? There is so many ways to calculate this. So many banks calculate differently, and we need to know where you're at right now. Okay. Please put a 1 on the group chat if that makes sense. If that resonated, if you put a gajillion dollars once, like I hope you guys understand that now. Awesome. The next thing you guys got to know is that financial reviews. So have you ever heard of someone getting approved for a credit card and then they use it and then immediately get shut down? Happens all the time, especially by one financial institution that is very notorious for doing this. It is American Express. And what a financial review from American Express is, basically they ask you to do an IRS form 4506T. Okay. With this form, they are trying to verify, hey, you told me on the credit application that you make a gajillion dollars, and we approved you for $25,000 credit card. However, now we are coming to doubt this $1 gajillion, and now we want to pull your IRS tax records. So, and if you don't fill this form out and submit it in 30 days, we'll go and shut down your credit card down. Okay. So this happens all the time. Okay. This happens all the time, especially with Amex, and you got to be very careful. We've had people before get approved for $10,000 credit card, and then they go max it out like the very next day, and then boom, financial review, right? Because that's not normal behavior. You know what that type of behavior is? Scammers. If they do approve a fraudulent application and they get the credit card, what is the first thing a scammer is going to do? They're going to max that thing, cash it out, run away, right? So they're again, fraud, guys. You guys got to put yourself in the position of the bank. You got to ask yourself, what can I do to make sure that I look as desirable and as best to the bank, that they know that I'm not a risky borrower, I'm not a fraud, someone that's going to take their money and run away with it, right? Alrighty, perfect. I think that makes sense. I think everybody was able to understand that. And this is just a taste. Like I said, there is hundreds of other databases for different purposes. And we were actually going to cover those in a later section. So let's go to the next section. Like I said, fundability versus credit score. All right, Eddie, I have a fantastic credit score. You already told me that there's some really reasons why I wouldn't get approved. But what is the big difference? What's the difference between these two? Okay, so the difference is what the banks look at. Okay, your credit score is something that the banks don't use to approve you for credit. Okay, they don't look at your credit score at your 850 and be like, oh yeah, $1 million, here you go, boom, right? No, they take a look at your credit report. So the credit score is only used after you get approved to determine interest rate. Okay, so once that is done, okay, so at the rating for the credit score, it's usually created by FICO, right? There's multiple other companies out there, but FICO is the biggest one, and there's 31 to 33 different variations of that FICO software to give you a credit score. Okay, and they only look at about 40 borrower behaviors that are reporting on your credit report. Okay, which if you don't understand what the fuck I just said, you don't know, like, Eddie, what's a borrower behavior? What is that? I'll teach you guys in a second. Okay. Now, fundability. Fundability is a metric that banks look at in order to approve you or deny you. Okay. They go to your credit report and they look at those borrower behaviors, and the banks can choose anywhere from a list of 150 borrower behaviors. Okay. There's 150 borrower behaviors that they have a massive list of. And they can be choosing, okay, I want to take a look at these ones, right? Or, hey, I'm going to deny you for credit based on these ones, or I'm going to approve you based on these ones, okay? And PS, like I said earlier, business credit approvals are 80% based on your personal credit report for business. Okay, why? Because if the person, the owner of a small business is not financially responsible, guess what? Personal problems are business problems. Those problems are going to be projected into the business. Okay, it's so true. It's very common. So I even talk to underwriters. They tell me, man, it's like 99% with us. Like, okay. So a lot of the banks, they're skewing heavily on your personal credit report. Okay. So like I said, for small business credit. Okay. Now, I know this bar behavior doesn't make sense right now. So let me go ahead. Let me go to the next section and explain. Okay. So again, let me reiterate. Credit scores are not used to approve you. Okay, they're not. And let me give you some case studies, you guys. So case studies here. Case study number 1. This happens all the time for my real estate investors. Listen up. We got this guy. Boom. Phenomenal credit scores. Right? Amazing credit scores. And this guy is a real estate investor. Okay? This guy is a real estate investor. Like I said, I get too many clients like this. And we're going to call this guy named Alex. Alex, the real estate investor. Okay? And his goal is to get $100,000 in business credit. All right? Who can relate? All right, who wants $100,000 tonight? Who wants to get $100,000? Put 1 in the group chat. Let's go. With my boy Alex over here. Right, there we go. Johnny, Chris, Nick, Ali. Awesome. Super glad you guys are awake. All right, so we take a look at Alex's credit report, at his 850 credit score, and because he's a real estate investor, he has a Lowe's credit card, he has a Home Depot credit card, he has an Amazon credit card, he has a Best Buy credit card. All the credit cards he has, they're considered consumer accounts. Okay? Now, unfortunately, this is not fundable. Okay? This is not a fundable profile. But wait, Eddie, he had an 850 credit score. Why? Why is that? Why is he not fundable? The reason why he's not fundable is because what a high credit score is, it gives you more of what you already have. All right. So if you have consumer accounts, it's going to give you more consumer accounts. Okay. So Victoria's Secret, Express, Amazon, those are all consumer accounts. Okay. This does not translate to getting business credit with these financial institutions. They're not even the same. This is a store, and this is an actual financial institution. Okay. So the consumer accounts will not help you get approved for the tier 1 financial institutions. Okay. The quality of the account matters. And this is how I explain it to you guys. This is how I explain it to all my clients and everybody I educate. Think about it like when you're applying to go to school, to university. What always looked better? Getting a degree from Harvard, the best financial or the best school in the United States, or getting that same degree from bumfuck university? Like, I don't even know who, like, random community college university, right? Harvard is going to be the one that looks the best, and every employer is going to hire the Harvard guy, right? Even though it's the same degree, the same curriculum, everything, but Harvard, different pedestal. Same thing with these financial institutions. Other financial institutions like Bank of America are going to want to see that you bank with Chase, Wells Fargo, these other banks that they have like respect for, right? They know that these guys are top tier financial institutions, not a Home Depot credit card. Okay. Next, case study number 2. We got our boy Elon Musk over here. Elon Musk, same thing. Let's say he has a fantastic credit score, right? He must be. He sends rockets up to space, right? And let's say that my boy Elon applies for a business credit card with Chase, right? And he automatically goes online, boom, 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 and gets $50,000 approval, right? But then he gets an email saying like, hey, we got to take an extra look at this. We approve you for 50K, but we want to make sure that we got to, our guys, our actual underwriters, take a look at this. Okay, so let's say after they take a look at it, he gets denied for 50K, and then he comes back with $5,000. Like, hey, after further review, we're now going to give you the $50,000, but we're going to give you $5,000 instead. And Elon is sitting there pissed the hell off, wondering what the hell happened, dude. You approved me for $50,000, and now you're going to give me $5K. Why is that? The reason why that is because on his credit report, he had a credit card for $50,000 on his credit report, but there was an authorized user. If you don't know what an authorized user is, it is basically when a person has a credit card and they want to authorize somebody else to have use of their credit card, right? So now that credit report is going to show up on the person's credit report that they authorized, and it's going to inflate their credit score, their age, the credit limits, everything. So when the system, the AI software that approved them, they saw this credit card, like, oh my God, that's a fantastic credit card. We're gonna approve them for 50K. But then someone who like took a deep dive, they're like, oh, that's just an AU. It was not even him who got approved for that credit card. That was mommy's credit card. That was daddy's credit card. He didn't get approved for that, right? So that's why they reduced the line of credit down. Okay, does that not even, so these banks, they're not dumb. You're not gonna go get, you're not. I've seen this firsthand, okay? I used to date a girl. She her younger brother turned 19, still hadn't had anything on his credit report. His sister added him to like three, 4 credit cards, right? With age $10,000 credit cards, amazing credit score for multiple years, etc. He had like a 720, 740 credit score, like without anything on his name. He was like, dude, Eddie, you're a credit card dude. Oh my God, like what credit card should I apply to? I was like, bro, you're gonna get denied for everything. Trust me, you're gonna get denied. He's like, no, 720 credit score. Oh my God, approved for everything, right? He goes apply, gets denied for everything. He looked like this guy. That's how he looked. I swear to God, that was his face right there. I'm no kidding. He was so mad. I was like, I told you, they're not going to approve you because it's an authorized credit card, okay? Does this make sense? Let's put a 1 in the group chat. Does this make sense? Am I speaking truth? Is this resonating with you guys? Beautiful. Let's go. Let's go. All right. Perfect. So, again, credit scores do not approve you. Borrower behaviors do. Borrower behaviors do. So now, what the hell is a borrower behavior, and what is a fundable person, Eddie? What is this? How do I become a fundable person? Okay. So we were going to take a look at borrower behaviors to calculate your fundability. Okay. And there's 6 elements. There's 6 sections that you need to take a look at. Number 1, optimizing that borrower identity. That borrower identity is what I was telling you guys earlier. That cleaning up the personal information. Okay. And we're going to cover that today. Number 2, optimize revolving accounts. We got to optimize your revolving account section because there's 2 major sections on your credit report besides the personal information. It's the revolving account section, and then number 3, like I said right here, optimize installment loans, the installment loan section. So we need to make sure that we optimize all 3 major sections of the credit report: the personal information section, the revolving account section, and the installment loan section. Okay, we need to make sure we optimize all 3 sections. Number 4 is traffic patterns. Okay, we're going to cover that. What the hell is that, Eddie? All right, we're going to cover that. I'm going to quickly, briefly explain that. Number 5 is trade line optimization, and number 6 is the 24-month look-back period. Okay, now with time constraints, I'm going to cover 2 out of this 6. Okay, and I'm going to pick 2 of the things that are going to resonate with you the fastest, and the things that you can do by yourself at home tonight in order to get results as fast as possible. Okay? Does that sound fair? Can I get it? Can I get a 1 in the group chat if that sounds fair? Awesome. Nick, Carrie. Beautiful. Natalie. Awesome. Thank you guys for being awake. I appreciate it. Awesome. Jose, Melissa, Malik. Let's go. Beautiful. All right, perfect. We're going to start with number 1. Optimize borrower identity. Okay, so again, we want to optimize our credit report. So what is step number 1? We got to pull the credit reports. Okay, I want you guys to go home tonight and make a free, let's listen again, a free credit report account with the following 3 institutions: Experian, TransUnion, and Equifax. If they tell you to put your credit card information anywhere, you went down the wrong path. Okay, the other way that these companies make money is by selling the credit reports back to you guys. Okay, we don't want that. No, you're supposed to be able to check your own credit report for free. Okay, and it would not harm your credit. Okay, so you make an account with these guys. Make sure it's the free version that they offer, and you make those accounts. That way you can pull the credit report. Step number two, you're gonna write down all the personal information they have. You're gonna put it on an Excel sheet. You're gonna write it down on a piece of paper, wherever you want to put, however you like to organize. But make sure you collect every name, address, date of birth, social security number variation, email, phone number, employer that they have of you. Okay, you're gonna write all those bad boys down. All right. Step number three. Oh, actually, to reiterate step number two, you might be looking at this information. Eddie, why the hell do they have 10 names, 20,000 addresses? How do I get a social security number variation? Where's all this information coming from? Right? So, three major sections that they're coming from. Number one, your current account on your credit report. Every single month, your credit reports, your accounts, your credit cards, your installment loans report once a month to the credit bureaus. Okay, and besides reporting and updated, hey, so for example, it goes like this. Hey, Experian, Eddie, this month he paid on time. This is his new balance. He still owes us $100. His current credit limit is $1 gajillion, and his utilization is 0%. And this is his name. This is his current address. This is his current birthday. This is his current social security number. Every single month, they're reporting all that information to make sure that it stays up to date every 30 days. Okay? So, whenever you move and you change your credit card information, oh, I moved houses, let me update my credit card. I'm going to go and put that there, right? I'm going to put, I changed my address. And then by next month, it's going to report that address, that new address to your credit report. Okay? So, accounts. Number two is credit applications. Every single time you submit a credit application, like I said, gets sent to the credit bureaus. The credit bureaus copy, paste that information over on your credit report. So, for example, let's say you by accident messed up and you spelled your name wrong for whatever reason. You were typing your social security number and you pressed the wrong key button. You submit the application, congratulations. Now you have a social security number variation on your credit report. And this happens all the time. I can guarantee you that 20% of you guys right now have a social security number variation on your credit report. I can almost guarantee that. Why is that? Because it happens all the time. People are goofy. People mess up all the time. My parents, when they refinanced the mortgage, what happened was that when my mom was on the phone, the person over on the mortgage company wrote down the wrong social security number. They were off by one number. When I checked her credit report, social security number variation. And then even the credit bureaus, Experian told us this social security number variation is being reported by the mortgage company. So guess what? I had to quickly call the mortgage company. Hey, you're reporting the incorrect social security number. Here's a copy of it. Please update your information. And then we sent the same copy to the credit bureau and everything was fixed. Okay? Number three is databases and furnishers. Again, all these credit reporting agencies, all the people and furnishers like banks and all this stuff. So whoever's collecting information and sending it out, they have information, so they're going to copy it. So for example, especially the major credit bureaus, they go to Lexus Nexus, they go to other databases like that, other credit reporting agencies, and they trade and buy information from them all the time. Okay, and this is why you may see 1,000 phone numbers. This is why you may see 2 phone numbers with Experian, but you go to TransUnion, you might see 20 phone numbers. And you'll be like, how did that happen? Yeah, it's because they're more active. They're going to and finding and collecting more information and from different vendors and data aggregators. Okay, so press 1 on the group chat if that makes sense. You're like, oh, finally, Eddie, I understand where all this information is freaking coming from. Okay, beautiful. Perfect. Okay, so what is the goal? Now you have your credit reports, you have that laundry list of a bunch of names and everything. What is the goal? The goal is to only have one set of information. One name, one address, one date of birth, one social security number, one of everything. And that is it. Okay, why is that important? Because when you submit a credit application, the software that is approving you sees you as a set of data points. That's it. Right? They don't know your personality, how you are. Do you have a great smile? Do you smell good? They don't know that. They just see, okay, this is one name, one address, one phone number, boom, that's a set of data points. And they're trying to see how many different rearrangements they can make of you. And the more rearrangements there is of you, the more likely you're going to get denied. Because then the software doesn't know which one is the real one. Is it this variation, or is it this variation, or is it this variation? And if there's too many variations of you, they're just gonna be like, I give up. It's gonna be a denial. I can't verify this person, right? So, plus having all that information, again, what you want to do as a borrower, your job is to make the banks feel safe, right? If I come up to you, if I come up to Johnny and I want to borrow $100, I'm gonna try to make him feel as safe as possible. I'll be like, hey Johnny, how's it going? Here's some water. Hey bro, can I really borrow some money, bro? I have money, bro. Right? I'm gonna be as gentle, as nice, and caring as possible, right? So you guys got to make the banks feel good, right? So if think about it, if you have 10 different names variation, you have 50 different addresses, what does that tell to the bank? Like, a bank is not going to feel safe. Either it's like, hey man, so either this person moves so often, so if I let him borrow $10,000 today, God knows if he's still going to be living there. It's like, he's going to be gone in 3 months. I don't want to lend money to that person, right? Or maybe, hey, is it because he was a victim of fraud, and then everybody out there and their mother has his personal information, and this is probably like a fraudulent application. I don't even know, right? So having all this is not going to make the banks feel safe. It's going to cause uncertainty. Okay. So again, you want one set of data points making up your personal borrower identity. Okay. So personal borrower identity. We got our big boy Rock over here. He's going to help us out. So number one, name. And Experian, you have, or let's give you the 3 options that you can have. You can either have your first and last name. You can either choose your first, middle, initial, last name, or you can choose your full name. Okay? Those are the only 3 variations that you can pick. Okay? So for those of you who don't have a middle name, you guys have it very easy. The one you're going to pick is this one. Your first and last. That's it. Very easy, very straightforward. Okay? Now, if you're like normal people, my bad, you guys. If you guys have a first, middle, and last name, then the one I highly recommend you to pick is the second one right here, the first, middle, initial, and last. Why is that? Because when you remove everything else, you're going to be, if you choose this option, there's going to be a time when you submit an application, and they're only going to ask you for your first, middle, initial, and last. And if you submit that, now congratulations, you have 2 names again. You have your first, you have this variation, and you have that variation. Now, if you do have that, it's not the end of the world. Actually, there's one credit bureau that forces you to have all 3, and that is Experian. Experian forces you to have all 3. Okay, so on Experian, it's fine. On all the credit bureaus, other credit bureaus, just always pick this one. You always have that one. And whenever you submit applications for the rest of your life, you're only going to submit that. What's your middle name? Oh, it's the letter M. Yep. What's your full name? Yep, letter M right there. That's my full name right there. All right. So, okay, that will make the application process smoothness. And again, the whole point is because they're just trying to verify you. Like the software, the backend system is just going to try to verify you, and that's going to cause easy approvals all day long. Okay, number 2, address. One address. That's it. That's all you need. Okay, and you want to use the USPS code format. Okay, so there's a little website that you can use. It's called USPS.com, and they have an amazing tool that allows you to search your actual address. That is like the USPS code. Okay, softwares have been becoming more advanced, so when you apply online, the website will automatically choose, like, recorrect your formatting errors and use, because they're connected to the USPS code system database. Okay, so but you want to make sure that you know exactly how to format your own address, because if you format, like for example, if you live in 123 Main Street, and the real format is for street, it's just ST, but you spell it out, congratulations, now you have 2 variations of your address. Okay, we only want one, like I said. Number 3, date of birth, one date of birth, one social, one phone number, one email. And then for employer, if you have a W-2 job, then you want to just have your highest W-2 job. Let's say you work three jobs, choose whoever is paying you the most. And then for our entrepreneurs and business owners here, we want to make sure that you have your QFE, basically your LLC, the business that you can go ahead and do. Okay. So again, your QFE, we're going to cover what the hell is a QFE in a later mark. By the way, Melissa, if you have a question, put it on the Q&A tab, okay? And we're going to cover that at the end. All right, awesome. Let's keep going, you guys. All right, documentation for your borrower identity. Again, number one, your driver's license. It must have the name, the PBID name that you chose. First, middle initial, last, okay? That's if you want to get super technical with it, okay? All right. Your chosen address, right? You want to make sure that you always update your address with the DMV, and you get a new driver's license or a new ID. And then obviously make sure that your date of birth is correct, right? Number two is your social security number card. This is actually not that hard to get. It's really not that hard to get. You just make an appointment with Social Security Administration. You go to the office, you submit documentation, and then in 2 weeks they issue you a new one. Like it's actually very straightforward. It's very fast. So you can always make sure that you change it and you want to choose your chosen PBID name. Okay, this is especially true for those of you that get married and you guys change your name legally. Very important for you guys to do, because then whenever you want to prove and clean up your personal credit report, it's going to be very tough when you have your driver's license reporting one name and then your social security number or card reporting a different name. Okay, so let's please make sure that you guys have that updated and you guys stay on top of it. All right. Okay. Boom. All right. The last thing you also want to do is update your accounts. Like I said, your accounts are reporting your PBID every single month. Every single month, they're telling it to the credit bureaus, right? Okay, so you need to be like Mr. Beast and give them a call and make sure that you're only updating your open and in good standing accounts. So why am I saying this? Because a lot of people in here are probably have a few late payments, okay? They on certain accounts, and you don't want to, depending on the tactic that you're going to do for credit repair, you may not want to update yet. Okay, so for rule of thumb, only update your open accounts that are in good standing. Okay, so make sure that all information is the chosen PBID name, and then you must know when they report. So like again, they only report once a month, so you need to just tell them over the phone or when you submit it. Check your credit reports. It literally tells you when they reported last time, so you can infer that or during the same time they're going to report this month. Okay, so bonus is also go and update the information on the credit reporting agency. So now that you made an account with Experian, you made an account with TransUnion and Equifax, go in there and update that information. Okay, so does that make sense? Can I get a 1 on the group chat if that makes sense? That was a long one. This is all about updating your personal information. Awesome. Beautiful. And this is everything we do on the onboarding call for our team, for our clients. That we do all of this for them. It's a lot of legwork, but we make it happen. All right. So again, from the rest of your life, now that you've chosen the PBID, that's the only name variation you're going to use for the rest of your life. Okay, and please don't share it. Okay, I know people like love sharing, but you guys got to be very careful. Okay, if you have a friend, if you have friends, which I'm hoping everybody here has friends, I'm pretty sure your friends know your name. They know your date of birth, right? Because you celebrate your birthday together. You probably posted online, oh my God, today's my birthday, right? You probably put your, like, if you have friends over, they probably know the address of your home. That's it. Like with that, and if they were to like, if they were co-workers, they may have seen a pay stub, or they may have seen a check where the last 4 of your social. Boom, with all that information, they can go apply for credit for you. Boom, identity theft. So make sure that you guys are on top of this and make sure that you guys are not sharing this information out right? You be very careful with this. Be very careful with who you share this, okay? Awesome. Next section we're going to cover. We're going to optimize revolving accounts. We're going to quickly cover this because you need to know this to go to the second section. We're going to cover the 24-month look back period, but you need to know at least a little bit enough of this in order to understand the second one, okay? So again, this is based on your FICO borrow behaviors, okay? So for example, if we're looking at the revolving accounts, those are credit cards and lines of credit, okay? So for the number of credit cards, the perfect number of credit cards on the personal side is 3 credit cards. Why is that? Why are we telling our clients that it's 3 credit cards? Because FICO, the company that gives you your credit score, has analyzed their entire database, and they have determined that the people who are the least likely to default on anything is people who have 3 credit cards, a mortgage, and an auto loan. Okay? So guess what we tell our clients? We tell our clients to have 3 credit cards, a mortgage, and an auto loan. Now, I understand that not everybody can afford a mortgage and an auto loan right away, but we're going to build up to that, right? So on the credit card, on the revolving account section, 3 credit cards. We have noticed that when someone has 0 to 2 credit cards on their credit report, they start seeing a lot of denials for having too little credit, not having enough credit. Okay, and that borrow behavior shows up, and that's a no-no. Okay. Now, if you have more than 3 credit cards, that doesn't mean that I'm telling you go close all your other credit cards down. Like, no, that's not what I'm saying. Okay. So FICO, what they do is they do it on a gradient scale. Okay. There's other factors that they take a look at, which we're going to talk about. But what I always tell people is like, hey, 3 is always better than 4, 4 is better than 5, 5 is better than 6. Okay, it's a gradient. Okay, so just because you have 7 credit cards, I'm not saying to go close them out. No. We gotta see your entire section and determine what will be the best levers to pull in order to keep improving your credit score. Okay. The second one is the age of those credit cards. How old are they, right? And this actually takes a big factor. According to FICO, it's only what 15% of your credit, but however, the age of your credit cards takes a big determining factor for fundability. I've seen people get denied left and right because of this one right here. When they have 1 to 3 or more accounts that are brand new being anywhere from 0 to 6 months old. I just today we got this, like a client got denied for a debt consolidation loan because when he applied, he had 3 credit cards that were under the 6-month rule. Okay, so 2 new credit. Okay, and then 2 to 4 months is still fairly new. So again, anything less than 24 months, which is the 2-year mark, is still considered new. Once it hits the 2-year mark, it's considered seasoned or it's an established account. And then there's still gradients after that, which we'll cover later. But just know, anything before 2 years, new. Anything after 2 years, better. Okay, awesome. Next section, utilization. So this is not traffic yet. So utilization, basically, how much usage is there on your credit card at the end of the month, right? That gets reported to the credit bureaus. From $100 to 19% is good. The $100 is the best spot to be in for one credit card. After all the other ones, you just want them to be 0. Okay, for one credit card, leave it at 100. Okay, why is that? Because if you have too many accounts with balances on it, you'll have the negative bar behavior of too many accounts with balances, and you can get denied for credit. We had one person had that where he had 15 credit cards. With those 15 credit cards, like 14 of them had balances, and like 10 of them were like $50, $100, $500, and there's only like 3 of them that had more than $1,000 on them. So the biggest factor was not that he had high usage. His overall usage was like 15% in total. However, there was too many accounts with balances on it. So all he has to do now is just pay those small balances, boom, and then he's gonna get approved for more credit next month. Okay. But we still want to use that. We still want to show that we're at least using our credit. So that's why we pick one credit card. We put $100 in there, or we leave it at $100, and then we pay it off. Okay. The 20% to 29% is okay. It's not the end of the world. 30 to 49% is bad. Okay. As soon as you hit that 30% mark, it is when they start deducting points off your credit score. Why the 30% mark? Again, because FICO has determined with their analytical software that once somebody hits 30%, the likelihood of them paying it back down to zero goes, like, their risk goes way, 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 way up. Okay. They start over leveraging themselves. Okay. 90 to 99 is horrible. You do not want to be here. And then anything, as soon as you hit 100 to over 100, that is the dead zone. That is almost as a 30-day late. That is really bad, because then that number also remains on your credit report right there, has high credit limit. The high credit limit or credit balance. That means, like, so for example, if your credit balance is or your credit limit is $5,000, but the highest your account has ever been was $6,000, they're going to see that. They're going to notice, like, holy shit, at some point, he was way over here. That is not good. What the hell happened there? Right? That, even though they're like, you brought it, let's say you paid it back down to zero the next month, that record of that you went overboard is still going to be on your credit report. And that is bad, bad, bad. Okay. They don't want to do that. Even though your credit score went back up because you paid it down to zero, it's still going to be there. Okay, now next thing is the tiers of account. That quality, remember the Harvard versus community college thing, is how good of those accounts are they? Are you getting them from tier 1 institutions, tier 2, tier 3, and tier 4? Tier 4 is the consumer accounts or subprime lenders. We don't want these. We want tiers 1 to 3, okay? Which I will show you in great detail later on, okay? Awesome. Actually, before we go to this 24-month look period, can I get a 1 in the group chat if all of that made sense? Number 2, if it didn't, Eddie, you're full of shit. Which one was it, 1 or 2? Are we still alive? Are we like, Eddie, you're talking too much? I know this is a lot of information to digest, you guys, and you guys are fucking troopers. Thank you guys for staying. You guys are killing it. Thank you guys for staying here. I know it's late. I know it's very early. It's probably 9 o'clock if you guys are in the East Coast, so you guys are troopers. I appreciate you guys. Get some water. Take a little small break. Here we go. All right, here we go. Next section. The 24-month look back period. Okay. The 24-month look back period can be applied to many different aspects. Okay. To the age of your credit limits, the limit, the actual limit, the balance, the utilization, the payment status, traffic consistency, and so much, like almost so many different bar behaviors they can take a look at. Okay. What the hell is the 24-month look back period? The 24-month look back period is basically, you are here today. What the banks and FICOs do is that they take a look at the last two years to find what are your borrow behaviors. What is your your behaviors around money? How do you manage other people's money? Okay, they're looking at that in 4 different time frames: in 3 months, 6 months, 12 months, and 24 months. Okay, that's how they're looking back at it, and they're looking at past previous behavior over here, and time goes this way, right? This is the past, this is the present. Okay, it goes to the right. Okay, now your past behaviors predict your future approvals. The reason why they're looking back is because they're trying to predict what you're going to do in the future. Okay? I was a trumpet player for many years, for 16 years actually. I practice every single day. Every single day I practice. Now, if I were to pick up, let's say I were to pick up the guitar today, I can say, hey, I'm a guitar player. But if you ask me, hey, how long have you been playing the guitar? And I tell you, oh, I've only been playing it for 1 day. The likelihood that you think, if somebody come up to you and be like, hey, I'll bet you $1,000 that Eddie is not gonna play the guitar tomorrow, you're probably not gonna do that bet. right? Because the likelihood of me doing it is like I haven't shown consistency yet, right? But if I tell you I've been playing the guitar for 10 years every single day, you're gonna take that bet all day long because the likelihood of me doing it again is very high, right? Same thing with your borrow behavior on the financial sense. If you've been late, so again, so let's go over here. So if you've been late every single month for the last 2 years, the banks are gonna safely predict they're gonna keep being late for the next 2 years, right? So if you've been making on-time payments for the last 12 months, right? 12 months, they're gonna safely predict that you can meet making your on-time payments for the next 12 months. And this is how fundability works. This is the big aha, the big key right here. And this is why when you get a late payment for the first time, boom, your credit score drops tremendously because now that behavior changed. It stopped. Now the banks are sitting there like, oh my God, what happened? Did he get a late payment because he simply forgot? Was it an auto pay issue? Did he change bank accounts and he just forgot to update it with us? Or did he change his behaviors? Did he say, oh, I don't want to pay these guys back? Did Eddie, knock on wood, pass away? And now we don't know what are we going to get our money back? Right? So the banks don't know what happened. So again, this is why your credit score drops. FICO doesn't know what happened. So boom, boom, your credit score drops tremendously. And then as time passes, this is why people like say, well, this is why they say, oh, after 2 years, your late payments don't affect you that much. Because that's true. They don't affect you that much because now you have new borrow behavior stating like, hey, okay, I got a late payment, but after 3 months, now you know that you now caused a new borrow behavior, right? This is why, because let's say, okay, we got the late payment. After 1 month, okay, hey, we're still not sure. Okay, he made the on-time payment now this month. I'm feeling a little bit safer, but it's not consistent yet. After 3 months, okay, hey, after 3 months, he got a late 3 months ago, but now for the last 3 months he's been on time. I can safely predict that he's gonna keep making on-time payments for the next 3 months now. Let's say now 6 months go by. All right, now I'm feeling a little bit more comfortable. So I can now safely predict that for the next 6 months, I'm gonna be safe. He's gonna keep making on-time payments, and that's how it works. For payments, for like I said, if we were to go back, for payments, right? For payments, payment status, if I keep making on-time payments, right? That's gonna go into the future, predict, and it's only gonna be for 2 years. They can only go 2 years in the future. Why? Because going 2 years and predicting like 10 years into the future, that's too much. They can't predict how the economy is gonna happen, if you're gonna get sick, if you're gonna get in a car accident, like that's too many variables to determine. Okay, utilization. This happens all the time when somebody has maxed out credit cards for like months, for like 2-3 years, and all of a sudden they pay their credit cards down for the first time. Yay, the banks are happy, but then that's still not a bar behavior. You can still get denied because if they were to take a look at your past utilization, your average utilization, they'll see, hey man, Eddie, you were maxed out for like the last 2 years. I'm glad that you paid everybody back, but did you pay them back because you won the lottery, or because you took this course, or that you went into this class and you learned about how credit works, and now you're going to change your bar behaviors? Which one is it, right? Or maybe did you get a debt consolidation loan and now you want to get more debt? Like, what is it? Like, they don't know. So until you show them by being consistent and showing these borrow behaviors, they're not going to keep you approving you. So again, same thing. Your past behaviors predict your future approvals. Okay, put a 1 on the group chat if that finally makes sense. Does that make sense to you guys? Diego, Ali, Christopher, Melissa, let's go. Awesome, awesome, awesome. Glad to see everybody still awake. All right, we're gonna cover those tiers that I promised. Hey Eddie, which banks? What banks do I need to be? Do I need to be banking with? Right? Here we go. Awesome. Glad that everybody's still awake. Alexis, thank you, thank you. All right, revolving accounts. Here we go. 4 tiers. Okay, we got 4 tiers. Tier 1, tier 2, tier 3, tier 4. And then we got percentage wise, right? We got the percentage, 100%, 80%, 60%, and 40%. This talks about the value of the product. And then this sideways is the value of the financial institution. Okay. So let's start with tier one, the best of the best. There's only 4 banks in here. Only 4. Chase is number 1. Bank of America is number 2. Citi is number 3. Wells Fargo is number 4. Why in that order? And why only those 4? The reason why is because those are the only 4 financial institutions in the United States that are backed by trillions with a T, of dollars. They have over $1 trillion in assets. So if anything were to happen to the economy, they can liquidate trillions of dollars in assets to cover anything that happens. So that's why they're tier ones. They are the Ivy League schools. These guys are the Harvard, the Princeton, the Yale, right? Of finance. These are the top dogs. Okay. Now, Eddie, why is there different like percentage? What is like now this will be determining the product that they offer. Okay. So in 100%, it would be the Chase Freedom Flex, the Chase Freedom Unlimited, the Sapphire cards, the main brand products that they offer. Okay. Now, if you apply for the Chase Southwest credit card, that is a tier 1 financial institution tied to a consumer-ish account. Okay. So they could be determined on your credit report depending on how it reports as an 80%, like, it's not that great, right? So it's not that great, okay? And it's also a line of credit. A line of credit is not looked so favorably on your credit report, and it depends on who's evaluating it, because FICO may add it to revolving account section, and now your revolving debt skyrocketed. But depending on the financial institution that takes a look at it, they may review that as an installment, as an installment loan, because they understand that HELOCs and lines, personal lines of credit, they're more used like loans, where you just have credit available, and then let's say you want to refinance, like let's say you want to do a home improvement on your house and you have a HELOC, and so you're going to remodel your kitchen for $15,000, and then you're going to be making monthly payments on it. So this is why, like, depending on who's evaluating your credit, which financial institution plus or which credit software looks at it gives you different credit score or different fundability options. Okay, so this is why we put it at 80%. Then we got all the way down here is authorized user. It's like I said, the back end, like, hey, I'm glad that you got an authorized user from Chase Bank. It looks fantastic on your credit report. But again, a financial institution is going to evaluate it at a very lower percentage way versus if it was actually yours, if it was actually a primary account, right? And also FICO does the same. FICO is not going to give you all the points based for this account versus an actual primary account. And so how do we lose value? We lose value as well when it is a joint account or a personal account or an authorized user, right? We lose 20%, and a co-branded credit card deducts 20%. Okay. Does that make sense? Let's put a 1 in the group chat if that makes sense. Number 2, Eddie, you need to explain it again. We got a 1, Christopher, Johnny, Melissa, beautiful. Alexis, 1, perfect. Diego, 1, Nick, 1, awesome. Perfect. Glad that you're still awake. Okay, number 2, tier number 2. We got all the banks that are in the billions of dollars. Okay, awesome. Billions of dollars. Still fantastic. We got US Bank, it's right there. US Bank acquired Union Bank this year. We got to figure out if they're going to become tier 1 pretty soon, probably. We got PNC, TD Bank, Capital One, 360. We got BMO Harris, and we got Truist in there, right? And just to name a few. Over here, we got Discover, American Express, and Capital One, the original Capital One. And why is that? Why do we have these? We got these over here. The reason why is because these guys right here are financial institutions that are in the billions of dollars, but they are depository accounts. Okay, you can deposit, you can open a checking account and you can go and deposit money and you can go in branch. You can go, there's a physical location you can walk into, shake somebody's hand, meet a bank teller and say what's up. Right? Versus these are usually, so again, we're going to cover this in a bit, but a few years ago, these banks did not have depository accounts and they still don't have a physical location. Amex and Capital One only have one location in the United States. So not enough. Okay. All right. So like Goldman Sachs is in there as well. All right. Now let me talk about everybody's favorite credit card, the Apple credit card. As you guys can see, the bank, the financial bank that is responsible for that credit card, it is marketed by Goldman Sachs. And it's down, so it's at tier 2, but it's a co-branded credit card of Apple. So it just goes plop right there, 60% tier 2. So it's still it's okay, right? So then and then we got again authorized user check guarantees. Okay, number 3 is all the credit unions. The tier 3, 100% is all the national recognized credit unions like Navy Federal, USAA, PenFed, DCU, all that stuff. And then we got all the local credit unions, the ones that have like 2 to 5 branch locations in the middle of who knows where, right? There are tier 3 financial institutions at 80%. Okay. Now let's talk about the elephant in the room. Tier 4, the bad guys. Okay, these ones are subprime lenders, and these are also consumer accounts. Okay, so under 100% is subprime lenders like Credit One, First Premier Bank, Elon Financials, FNBO, Synchrony Bank, Merrick Bank. How do they fall into this category as subprime lenders? Because it depends on their terms and conditions that they offer to their customers, to you guys, the borrowers. Okay. If they have very high predatory practices like monthly fees, yearly fees, if this like for example, the biggest culprit that everybody knows about is called Credit One. Credit One preys on people with bad credit. So they're called subprime lenders. Subprime, basically people who don't generally qualify for all this, they target those people with crazy fees and they don't help them build credit. Okay. So this is why you got to be very aware. And banks know that. These guys know that these guys are predatory lenders. So if these guys gave you money, these guys should be very afraid of you. Okay, so this is why we don't want these guys on our credit report. And again, please don't just go close any credit card down just because you got an FNBO credit card. Please, you got to understand how everything works. Okay, again, we got to make sure we can pull levers slowly to make sure that everything is that way you make the right decisions. Okay, over here are on this tier 4, 80%. We got all the financing from like major financial institutions or other locations like stores. Like for example, if you go to your tire shop and it's going to cost you $400 to get new tires, but they're like, hey, get our credit card and you can get 0% interest for 12 months. You can be making monthly payments on it. Boom, that is a consumer account, right? We don't want those. We don't want those. Okay, on the credit report. Okay, the next tier down is store credit cards, but that are backed by an actual payment processor like Visa, Discover, MasterCard, Amex. Why? Because these cards, these store credit cards, this Walmart credit card, this PayPal credit card, you can actually use it at other locations. You can, like this Walmart credit card, you can use it at Walmart and other stores. Okay. Now these ones down here, these are also store credit cards, but these can only be used at that store. And this is the worst of the worst, right? This is horrible. It's credit that can only be used at that location. And listen to what I'm saying very carefully because I'm going to repeat this at the end of our call. Okay. It's credit that can only be used at that location, at that store. Okay, we don't want these. These are really bad. Okay, Let's put a 1 in the group chat if all of that makes sense. Number 2, Eddie, you need to explain that further. Perfect. Awesome. Awesome, awesome, awesome. Perfect. Let's go. Let's keep going. All right. Now, bar behaviors. If you guys want to take a little screenshot, here's a little freebie. Here is the top bar behaviors that are about revolving accounts. There's about 19 of them, give or take. Okay. So the ones that I highlighted are talking about revolving accounts. So for example, amount owed on accounts is too high. What does that tell you? Hey, your credit utilization is too high. Hey, too few bank revolving accounts. Hey, you have too little credit cards. Hey, Rafael, can you put your question in the Q&A section, and we'll cover it at the end. Too many bank or national revolving accounts. Too many accounts with balances. Right? Here we go. Too many consumer finance company accounts. That way, you guys don't think I'm like pulling this out of my ass. Okay, this list is given. It's being collected by FICO, sample FICO credit score recent codes. Okay, boom, right there by FICO itself. FICO's telling you that they're going to drop your credit score if you have what? Too many consumer finance company accounts. Right there. Okay, so look at all these. These all are revolving, are about bar behaviors revolving, about revolving accounts. All right. The next one we got to take a look at is bar behaviors that are about consumer type. So now this is it's a tailored list about consumer accounts. So same thing. Some of them overlap. Some of them definitely overlap, like too many revolving accounts, too many consumer finance company accounts, too many accounts recently opened. Why is that one about consumer accounts? Because when you go shopping, let's say it's December or November, what a lot of people do is they go to the stores and then they get, oh, you get 0%, blah, blah, blah. Oh, well, I'm doing Christmas shopping. Yeah, let me get that one. Boom, 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 boom. Right? So then they open like 2 or 3 new credit cards and that are all consumer based. Okay. So you guys got to be very careful, very diligent. That way you don't end up looking like this guy right here, looking at your credit score and wondering why it dropped, right? Okay. Now, how can we tell that an account on my credit report is a consumer account? It's by how it reports. And this is a quick example. So let's say you have your Victoria's Secret credit card. Boom, Victoria's Secret credit card. The way that it's going to report on your credit report is that it's going to have the financial institution that backs the credit card, like this one right here, SYNCB. Then you have a dash, and then it tells you the store, Victoria's Secret, right? Now, what is this? This is Synchrony Bank right here. Okay, so that's a financial institution that gives this store credit because Victoria's Secret is not a financial institution. They can't extend credit, but Synchrony Bank can, and we can partner up with Synchrony Bank, right? Same thing with this one, Citibank is the one that finances the Best Buy credit cards. Okay, so that's why when you have a credit card from Best Buy, it's going to look like that, and they're going to see, oh, it's a consumer account. Alrighty. Now, what do we want? We want high value credit cards. So we want credit cards in this area, 80 and above, and only from tier 1, tier 2, tier 3. And not only do they have to be from that area, they have to be 2 years old, right? 2+ years, right? Like I said, established, not new accounts. And they should have a big credit limit, each of $10,000 or more, each in the 5 figures. And they need to report to every single credit bureau. There's no point if it's only reporting to one credit bureau and it's not reporting to all the other ones, right? Because what are you going to do when the bank that you apply for credit, they pull Equifax and your amazing credit cards are not reporting there? That'd be bad, okay? And it cannot be an authorized user, right? Because otherwise that will fall in the 40%. And it cannot be an overdraft/protection check guarantee accounts. What is this? Why can it not be that? So what is an overdraft protection? Overdraft protection basically means that if you ever go negative on your checking account, this overdraft protection account will save your booty, but it doesn't save your butt when we're talking about credit. Why is that? Because if you ever get overdrafted, that means that you don't know how to manage your own money. And why the hell would the bank give you their money when you can't even manage your own money? Okay, so these are no bueno. You don't want these. You never want to get one of these. You just tell the bank, hey, if I don't have enough money in the bank account, just don't process the payment. Just be like, don't have money. All right, never extend me credits when I don't have enough money, because they're going to keep track of that, and that's going to hurt your internal performance status score with the bank. And if you actually have an overdraft protection account and it reports here to the credit bureaus, they're going to see that. And other banks don't want to know that you use that line, that you use your overdraft, because again, they can now see that you don't know how to manage your own money. So no bueno there. All right, a little bit more. So again, subprime lenders, we really want to run away from these. And these get you guys with their build your credit offers. Okay, you got to be very scared. If you ever hear someone say, oh, apply this to build your credit, we don't, it's targeted to people that don't know how to actually build credit. So you got to be very wary of when you hear build your credit offers. You got to be very wary of it, because it's probably from subprime lenders. Because again, who are they targeting? They're targeting people that have bad credit, that don't know how to build credit, right? So they're probably subprime lenders. We don't want that on our credit report. Run away. Next, it's all the fintech companies, right? So Chime, all these companies are like, oh my God, if you give us $100 every single month, we're gonna report to this account on your credit report, and you're gonna building credit and blah blah blah. No, fuck that. Fuck all that. Do not do that. You want to build relationships with top tier institutions, not with all these fintech companies that are coming out. Okay. So be very careful. Again, be very careful of when you hear increase your credit score. No, like build credit, like raise your credit score, stuff like that. Be very wary of that. Do not apply. We want to build relationship with good financial institutions, not e-credible. Like Chase doesn't care about e-credible. Like they're not going to care about that. The next thing is the consumer, like I said, consumer accounts, right? The Home Depot credit card, the Slams Club, even applying for these hurt your credit score more than applying for, let's say, a mortgage. A mortgage inquiry is not the same as a consumer type inquiry. Okay, it like FICO penalizes you for even having a consumer inquiry. They will drop your credit score like 10 to 15 points versus a normal hard inquiry. They will only hurt you like 1 or 2 points. Why? Because again, you're showing incorrect borrower behavior. They don't want to see that. So if you do get approved, you just got approved for a new tier 4 credit card. Again, 40%. If it's a consumer account, it will lower your average age of revolving credit, and it's going to add more credit, which is one of the borrower behaviors, is going to be too much available credit. I've seen people get denied for having too much credit on the personal side. Okay, so these are things that you absolutely need to avoid. Now, like I said, we were going to talk about the age of accounts. Once you go past the 2-year mark, there's different tiers. It is 3 years, 6 years, 11 years, and 25 years. This is why your grandma's credit card that has been open for 25 years looks phenomenal. And this is why your grandma has an 850 credit score, because this is boosting her credit score like crazy, because she has shown that she can maintain on-time payments for 25 years, that she has been able to keep using that credit card for that long, maintain on-time payments, keep low utilization, etc., etc. And this is why this, like, also besides just the first two, the 24-month look back period, they still take this into account in the overall picture. Okay, to like, and this will really does affect your credit score. Okay, awesome. Okay, so before we get to this, to the structuring your business, Can I get a 1 in the group chat if all of that makes sense? Can I get it? So we're done looking at the personal information. Now, like I said, there is still like so much more information that we can cover. Like I said, I can go for hours talking about personal credit, but in all honesty, my voice is giving out. My voice is very tired. This is quite long. We've been going at it for almost an hour and a half. So you guys are troopers. Thank you guys for staying this long. So let's do this. How to structure your business. Okay, most people fuck this up all the time, and we gotta fix it, and it's super tedious. All right, here we go. So, real estate investors, does this look familiar to you guys? Can I get a 1? Or my real estate investors, does this look familiar? Where you're right here, you have this holding company right here, and then you have an LLC for each property that you guys own. And now these properties, residential properties, commercial property, they're paying money to the property number 1 LLC, to this LLC, and then the LLC is sending the money over here because this LLC owns this LLC, right? Does this look familiar? Right, awesome. Diego, Melissa, appreciate it. Thank you. All right, so this is how most people structure their LLCs. Why? Because they go on YouTube University and they see, oh, like every single lawyer, like this is how you avoid paying taxes and liability protection, and this is how you're gonna stay anonymous. You're gonna go get a Delaware company and blah 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 blah. Right? All this fun stuff. Right? Now, this is fantastic for all those purposes, like liability protection, anonymity taxes, CPA is going to tell you all that fun stuff. Like that's fantastic for that. But for funding purposes, it's not the best structure to have. Okay. So what are we going to do? How are we going to structure this for funding purposes? Okay. We're going to structure it like this. Guys ready? You guys take a screenshot of this. This is fucking I'm giving us a gem right here. Okay, let's take a screenshot of this bad boy right here. This is how you structure a corporation, especially an H corporation. If you guys ever decide to go buy one or you already have one, et cetera, et cetera. And this is what we're talking about. When I mentioned your employer on your credit report needs to be your QFE, this is the bad boy I'm talking about, your company, your qualified fundable entity. This entity is actually qualified to get funding, okay? But instead, like my real estate investors, they were wondering, hey, I have this holding company. Why can I not get business credit for this? This is my real estate investment company. I make $1 million doing this. What's going on? Because it is structured differently, okay? So this entity needs to be completely bank facing, needs to be transparent ownership. So for example, Wyoming companies. I get business credit for Wyoming companies all the time, but just letting you know, depending on which type of, like how much, once we get to the big boys, like the lines of credit, we're talking about $250,000 or more, like they are not, like they're doing way more due diligence. Okay, they're going to be going to the Secretary of State. They're going to be analyzing and taking a look at way more other things. So the best thing that you want to do is to make sure that you own your entity in the state that you live in, and it's completely transparent. Like they can actually verify that, hey, yes, Diego is the owner of this company right here. I see it on the Secretary of State right there. Boom, Diego. Awesome. Looks fantastic, right? The other thing, this LLC right here cannot own other companies. Why is that? Because when it's structured like this, where this company owns this company, and you try to go get credit for this one, they're going to take a look at, oh, Diego, this is a holding company? So you're telling me this owns other LLCs? Okay, well, now it's going to make the underwriting process so much longer because now I got to take a look at this LLC. What industry is it in? How does it make its money? What are the liabilities? Blah, 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 blah. Okay, now this one. Now we got to underwrite this one too. You just made the underwriting so much more complicated. Okay, now you're gonna have to pull up documents. Oh my goodness, like don't do that. No. This is why almost holding, the word holding is a red flag. like don't even name your entity or like holding company. Okay. Next thing, this LLC right here, this entity cannot be owned by another company either, because again, if this is the LLC that you want to get business credit for, well, they're going to be like, oh, the owner of this company is this one over here. Well, what does this one do? And again, it goes down the chain again. Okay, don't want to do that. Next, it cannot own approval killing assets. Okay, what is that? It cannot own assets like real estate, because real estate is a high risk industry. And there's a lot of things that would think, like, again, this is very general. There's banks that are very specific to different industries, and depending on which bank you can go to, some banks like your industry, some other banks don't like your industry. So this is general knowledge for you to stop seeing so many, like, so for banks to stop closing their doors in your face the least often or as possible, right? So again, so when you're this guy and you own a commercial property, the bank may not want to do that. Or maybe you're this guy and you have a few real estate properties and they're all being fixed and flipped and they're doing all that. They don't like that. They don't like that. Too much risk. Things can go wrong, right? So, and it needs to be from a fundable income source. So like I said, when you're doing real estate transactions, when you're a fix and flipper, you're going to see a lot of denials because, again, it's not coming from a fundable income source, okay? So how do we make it? How do we make it a fundable income source? We make it so that this company is a management consulting company. It's a consulting company, okay? Who's the owner? You are. You're the owner of this company. Who is the employee of this company? You're the only employee of the company. Okay, awesome. So how are we going to run this? Let's say that you have all these other companies right here. Hey, Diego, here's your real estate investment company right here. Boom. And let's say Diego also owns a Walmart, a little, or like a grocery store right down the road. He does Turo on the side too. And he has this other LLC that makes him $10,000 a month on Turo, let's say. And then he has this other business, and this other business. This is his real estate portfolio properties right here, making him $250,000 a month right there. Boom. Right? So what happens is what you do, instead of you making all these LLCs be owned by this company, just like how you have it over here, where you have all these companies being owned by this one. No. You don't do that. What you do instead is you make this company the consulting company for each LLC. And at the end of the month, whatever profits this company made, you send them an invoice to that company. Hey, this month I spent 20 hours working on this company. I'm going to invoice you guys $100,000, right? Because this month you guys made $100,000. And now all that income is going to flow into this company. This company made $100,000 in profit fixing and flipping properties. However, as soon as you move over the money, right, you send an invoice to this company, you pay it off with this one. This one now made $100,000 in consultation fees. Okay, now that is a fundable income source, and you do that for each company, just how you're doing it here, right? You're just sending the money over to this company, and you're doing it because of its distributions as an owner. No, you're going to do it as consultation fees. Boom, fundable income source. Now you go to the bank. Hey, I have this company makes $1 gajillion in consultation fees every single month. Boom, funding all day, every day. Put a 1 on the group chat if that makes sense. Does that make sense, real estate investors? Does that finally make sense? 4 ones. I love it. Perfect. Let's go. Let's go. Amazing. Perfect. Melissa, Diego, thank you. All right, perfect. So that is how we structure our real estate investors profile to be like this. Consulting companies, okay? Because at the end of the day, that's what they are. They're consulting each one of their businesses. Again, that's Elon Musk. Elon Musk is the CEO of multiple companies, right? He's also the owner of a lot of companies. He only allocates a certain amount of hours per week per company, and then builds that company, or has W-2 distributions, shares, and all these other things, right? And this is just one form of payment that you guys can do. Okay, awesome. Now, I get asked this again, net 30 accounts. Like I said, I promised net 30 accounts. So Eddie, business credit, do I need net 30 accounts, right? So what are net 30 accounts? Everybody asking, like, if you don't know what they are, they're trade credit, like credit or vendor line credit. And it gives you 30 days to pay. Okay, it's credit extended to you by the stores, by like Uline and stuff like that, Quill, Granger, AutoZone, Home Depot. There's many companies that will extend commercial credit to businesses. Okay, and they're called net 30s. Okay, because they give you 30 days to pay. Okay, so they're consumer accounts, right, on the business side. Right, consumer accounts because it's a line of credit that is only usable at the company that is issued. All right, I hope this is ringing some bells right now. There's business, it is tracked by business credit bureaus, like in the most popular one is called Dun and Bradstreet. So vendor accounts mostly report on Dun and Bradstreet, not Equifax Business and Experian Business. Some do, not a lot though. But banks mostly pull Equifax Business. Okay, just so you guys know. Even Experian Business too. Okay, so and then money and timing. So you got to spend money. So for the account to report to your Dun and Bradstreet report, you have to spend a lot of money at a very specific interval at a certain amount. It's like a whole shebacle. Like it's super annoying, and it takes months. And you have to do it for a minimum of 3 months straight. For it to final report, it's annoying. It's so much harder to track than regular credit, because there's just not a lot of laws that enforces. There's not a lot of laws that like enforce truthful reporting of credit on the business side, because we're not dealing with people, we're dealing with businesses. Okay, so to answer the big question, are net 30s help you? Will net 30s help you? Let's put a 1 in the group chat if you guys believe yes. Put a 2 in the group chat if you believe that these are not going to help you. Let's see who's been paying attention. All right, I'm seeing a lot of 2s. I'm seeing a lot of 2s. Look at that. Oh, we have a 1. Either someone was not paying attention. All right. The majority of you guys got it. No, these are not going to help you to get to the goal of business credit. If you were trying to get a Uline, line of credit, if you're trying to get a fleet gas card, then yes, by all means, these are going to help you. But if you're trying to get corporate credit, business credit, if you're trying to get, money from Chase, Wells Fargo, Bank of America, these are definitely not going to help you. Okay, these are not going to help you. Why is that? Because these are the same thing as stored credit cards on the personal side, right? There's just stored credit, it's stored lines of credit. There's just 30 lines of credit given to you by that store. Not the same. So, you guys, who got some value out of this? Let's put on 1 in the group chat if you guys got some value. You guys happy with this presentation? Do you think I did a good job? You think I delivered some value? Awesome. I'm glad to hear that. So here comes the presence. Here comes the presence, you guys. Holy shit. I'm so excited to show you guys this. This is insane. This is absolutely insane. Here you guys go. So this gift I've been working on for years. This is something that I've been building for myself, for my own business. But I want to give it to you guys because of what is happening. This present that I'm going to give you is so important, okay? Why is it important? Because of what's going to be happening in 2024, okay? Let's get serious for here for a minute, okay? This year, 2024, because of how credit works. If you guys study credit as long as I have, you guys understand how credit creates cycles in the economy, okay? This is why you have years where it's a major bull run, the economy grows, everybody's making money. For example, in COVID, they printed a shit ton of money, trillions of dollars, stimulated the economy, people were spending money, et cetera, et cetera. And businesses COVID went like this, and then all of a sudden, boom, the economy recovered really quick, right? Because it was credit, right? Money was introduced into the system, right? However, we have to come back down at some point, and 2024 is looking like we're heading into that recession. Okay, it's just I'm not trying to scare you guys here. I'm just being super honest with you guys, and that's how the game works. Okay, that's how the economy works. Okay, so 2024 we're heading into a recession. We're seeing the tightening up of money, especially with the banks. Okay, why are we seeing this? Right, record high inflations. Like inflation, this is the biggest rate of inflation we've seen in the history of the United States. We went from 0 to 100 real quick, okay? With how fast the Feds raise interest rates, okay? Causing like, and again, inflation because of all the money we printed. And they're raising the interest rates because they're trying to control inflation, okay? So because of inflation as well, credit card debt is an all-time high. We just surpassed last year over $1 trillion in credit card debt. It's the most amount of debt any American has been in debt. Man, so many people are feeling this burn right now. Like, you guys have no idea how many people I talk to where they're just massive amounts of credit card debt right now. Business owners, average people trying to buy a home, a car, like whoever you are, like there's so many things that are affecting your credit card debt. Especially the spending, the spending culture that we had because of COVID. We print a lot of money, cost, you know, the price of goods to go up, everything. Okay, so the next thing is because of the major bank failures that we had at the beginning of last year. The beginning of the last year, Silicon Valley Bank, Signature Bank, First Republic, they all were bought out. They failed. They failed. Why did they fail? Because they had a liquidity crunch. People got scared and they ran to the bank and took their money out. So this is what happened in the 1920s. They had a bank run, okay? So this is major. This is a huge problem to the banks, okay? So and this is why, again, they're restricting the amount of lending that they're giving out. Why? And they're putting new regulations in place to confront the time of where we're at right now. So this is why right now for our clients, we're telling them you have to open bank accounts and deposit money. You got to give them, you got to build that trust first with a bank and deposit some money so that they can trust you in giving them some money back. Okay. So what does this all equal? So we have inflation, we have the recession coming, we have credit card debt, we have all this. So what does this equal to? This equals to a big, major, alarming financial crisis is going to happen, okay? Now, again, recessions are not pretty. Recessions are not pretty for the average American person, right? The average American person loses their home, their jobs, layoffs happen, they lose all their money, all their savings, and it becomes a really tough time for a lot of Americans, okay? It's not going to be a fun time. However, the people who are ready with credit and cash stockpile ready to go, they are ready to buy those assets, those foreclosures, those businesses that unfortunately they had to close or they had to sell at a loss because, again, because of the recession. But this is where the biggest wealth transfers always happen during recessions. So if you want to prepare for the recession, the best thing is also to make sure that you're not going to be the person at the short end of the stick with high amounts of debt, credit card debt, like losing your home, losing your job, etc., losing everything that you have. But you want to be the person who already knows credit, started building credit ahead of time, started getting credit, and knows how to leverage it and knows how to leverage your property to be able to take into be able to buy all those assets that were at sale when the recession was happening. Okay, that's where I want you guys to be at. So the thing that you need to do is take action now. You should have taken action like years ago, but we can't go back in time. Until we do, you let me know. All right. So until we do that, you need to take action now. We need to start building credit now. You first need to educate yourself. You then, once you educate, you need to put a game plan in place. And then you need to execute that game plan. And then you can, once you have that, once opportunity comes, you're able to leverage your credit. You're able to leverage all the money you spend stockpiling to be able to buy businesses, buy real estate, buy everything you need, the cash flowing assets. All right. So in order for us to do that, I want to be that person. I want to be the person you that is going to be able to guide you in order for you to take action, right? You need that mentor, you need that guidance. So here's my presence for you guys, okay? My present number one is I want to give all my knowledge away to you guys, okay? We're going to be doing a personal credit mastery course, okay? Again, why is that? Why are we starting with a personal credit mastery course? The reason why we're starting with this one is because I said 80 to 99% of the credit approval processes even on the business side is based on your personal credit report. Okay, so this is going to prepare you to what? To get business credit. All right. And we on the course right here, we're going to be dropping all these content. It's going to be so many hours of content. It needs to be digestible. So you're going to have all this content breaking to you down, lecture by lecture, instructing you everything that you need to know about personal credit. Everything that I know about personal credit is going to be in this course. Okay. And every single time I know something or need to update something, boom, it's going to be there. Big major announcement, letting you guys know, go watch that. Okay. Second thing is you guys need a community because time changes all the time. What worked a few years ago may not work today. Because why? Because the time changes, the economy changes. Now the banks either become looser in the regulations or they become stricter in the regulations based on what the economy is doing. So you need a community that is going to give you access to be able to talk to like-minded individuals with me and other people that are going to be able to see what's going on in real time, and so that you can always adjust and be ready to execute whatever. Okay. Now, in this community, this is what it's going to look like. It's being hosted by school. You're going to have, first of all, multiple chat rooms here. In these chat rooms, we're going to have, the welcome page where I want everybody to introduce themselves, tell me what your goals are, where you're at, and where you want to go. Announcements are going to be held here when recordings, live calls are going to be happening, journal discussions, questions. On the questions, you guys, I'm going to be able to answer all those questions that you may have right there. Application data points right here. So every single time you get approved or denied for credit, you're going to be putting all those data points right here, and I'm going to be able to tell you, okay, you should have done this and that. Like, hey, this is why you got denied. I'm going to be able to help you guys, and then the whole community is going to be able to help you guys as well. And that way, you guys also know, like, oh shoot, Chase is denying a lot today, or like, hey, Chase is denying a lot of people with this type of credit score, or this type of credit profile. That way, you guys get data points on what's happening real time. Okay, any massive wins, right? And resources. I'm going to be linking resources, which I'm going to be talking to you guys about in a bit. I got some crazy surprises for you guys with that. Okay, with the community, I'm going to have my full support staff in there. My entire staff that I use that I have built in like the last few years to handle 40 clients a month, they're going to be on this group chat. They're going to be talking to you guys. They're going to be answering questions. You guys are going to be able to ask them questions personally as well. They're going to be able to get back to you every 24 hours. They're going to be on it. They're going to be helping you guys out. So not only me, you guys are going to get perspective from me. You're going to get the perspective from my executive assistants, from my funding director, my credit repair specialist, social media, more credit repair specialists, my credit repair director, my credit repair manager, my onboarding director, my customer success manager. They all have experience, years of experience helping me out. You guys are going to not only, like I said, not only get my perspective, but their perspective, because again, these guys are in the trenches every single day with like hundreds of clients a year. Okay, so these guys have also great perspective, and these are the guys that are doing the day-to-day work. Okay, so you guys are going to have access to them, going to be able to answer questions with them. They're going to be able to answer your questions. Number 3, it's weekly Zoom calls. We're going to get on weekly Zoom calls to talk about the times and answer any questions and give you guys homework. Right? We're going to give you guys homework. Everything call, hey Alexis, looks like you had this issue last week. Were you able to get it done? Yes or no? What were the difficulties? What were not the difficulties? Right? We're going to be able to guide you and help you out with that. All right. Now, present number 4, I'm going to be giving out every single resource I have. Every single resource that I have created. Every single resource that is online, links that I use, websites that I use, PDFs, SOPs that I created, everything that I use for my business, I'm giving it away for free. It's going to be in there. Okay? Everything. Okay? Now, let me show you guys this. So within my resources, There is a few that I handpicked selected that I felt they were so crucial, but I still want to give them away for free, but I want to make you guys work for it. All right. I apologize, but I'm going to make you guys work for it. In school, there's this thing called gamification, where depending on how much you interact, how much you contribute to the community, the more points you gain. And then the more points you get, then you eventually unlock certain levels. Okay. And on those levels, I put those resources locked behind those levels. Okay. And I made sure that there was a reward for you guys for every single level. I made sure I had to create, I like detailed it. That way you guys get massive rewards for every single level that you guys unlock. And I want to show you guys what I cooked for you guys. You guys ready? Here we go. Level 1, as soon as you join, you're automatically already in level 1. So congratulations, you will unlock something called the bank application database. What is this, Eddie? What is a bank application database? That's a great, fantastic question. It is a tool that I have created personally that I've used for years in my own business. The reason why we see great approvals and we know exactly what we're doing is because I have tracked every single application I've ever submitted for a client in my 5 years of credit history. Okay. And then I put whether they got approved, denied, what were the recent codes, the borrower behaviors, what was the credit score, what state were they in, how much did they put for the gross annual income, how much did they put for the business one, the personal one, all these different questions that a bank application asks you, I wrote it down. And I put it in a database that looks like this. This is what it looks like. You have your name, you have the state, all this information laid out. And then eventually what you can do is filter. Hey, I want to take a look at every single credit application that was approved by Chase Bank in this state with this and I want to see what credit bureau they pulled, and I want to see what was the range of credit score that the person needed to have in order to get approved. Right? What was the average income that they were putting? What was the monthly revenue that they were going to be putting? What was the the monthly expenses that they put? That way you guys get a feel. What industry were they in? What NESCS code were they in? How many employees did they have? Right? All these. What was their average age of credit? How many inquiries did they have on the credit report? Did they have any derogatory marks? Did they have late payments? All those questions, and you can filter by every single one of those factors. What was the credit utilization? All of those. And this is why we can determine, hey man, with Chase, we never see someone get approved that has a 30% utilization, because based on our 5-year records, that's never happened. However, for American Express, it's actually they're more lenient because we have the proof, the track record to be able to prove that. This is why this right here is gold, and I'm literally giving it away on number 1. And so what I'm going to give you guys is have a submission link where it has all those questions, and whenever you apply for credit and you get the results, you go through that form and you put like, okay, I applied at this bank, it was this credit product, here's how much I put, every single one of those questions. It's like almost filling out the application once again. And you submit that. And now the more people that submit that, the more people that contribute to this, the more information we're going to have in real time. And this is gold. And I will be putting every single client that we get them funding. Now, we're all like the reason I started a new database for you guys. The reason why is because my original database has all my clients' information. For legal purposes, I cannot disclose that. But so again, I'll be putting new ones, but I'll be hiding the person's identity for legal purposes. Okay, so for example, this person named Rosa is not Rosa. Okay, that's not their name. Okay, but all the other information is accurate. That way you guys get an understanding of what got approved, what got denied, etc., etc., etc. Okay, can I get a 1 in the group chat if that is fucking worth it? Like if you guys like, holy shit, Eddie, that is amazing. Or can I get a 2 if you're like, Eddie, who gives a fuck about that? Awesome. 1, 1, 1. Awesome. Awesome. I'm glad you guys like that. This is my baby. This is my absolute gem, my absolute gold right here. This alone can be worth so much money. All right, we're gonna go to the next one. Once you unlock level 2, called the credit rookie, you're gonna get something called the credit game plan sheet. This is something that we fill out for every single client that we go for business credit funding for. So on the onboarding call, we do this every single onboarding call that we do for our clients. Okay. And let me show you guys at least 2 pages of this game plan sheet. This game plan sheet is used to onboard a client, fill all this information out, and it gives us an eagle's eye view of their credit health, and it gives us an assessment, and then we can write steps 1 to 3, 1 to 5 of things that needs to get done in order to go for funding. Okay, so let me show you guys that real quick. Let me show you at least 2. The first page that everybody is gonna really fill out is all the information tab. This is the information tab. Basically, you're gonna cover all your personal information, all your business information, your personal credentials, your business credentials, login credentials, right? So for Experian, TransUnion, Equifax, if you're doing credit repair, Identity IQ, my FICO credentials, Credit Karma, FTC, CFPB, right? All these things. And then you can just keep adding more and more, right? Background info check. If you're going for SBA, they want to know if you have criminal background, right? Merchant, right? All that information there. So this is going to be the information page, right? And this one over here is called the game plan sheet. All right. This one is the first section is the personal credit report audit. You put all your revolving accounts, primary, joint, or authorized, date that it was open, the open and close, balance, credit limits, and percent. It automatically does the percentage. You put the monthly payments. It'll tell you how much you need to pay per credit card to be below 30%, below 20%, below 10%, and the date the credit card reported. All that information gives you a total, and then eventually all this information for the loans, and then all the accounts with adverse information will give you a total credit health assessment automatically. That way, it gives you an eagle's eye view of all of these borrower behaviors that could contribute to benefit you, or that could be negatively affecting you. All right. That way, you can then start taking a plan. Okay, hey, it looks like I have too high utilization. Maybe I need to put a game plan in order for me to be able to pay these credit cards down, or maybe get a debt consolidation loan, et cetera, et cetera, et cetera. Okay. So, and here's the beautiful thing, you guys. Every single time I update mine, I'm gonna update yours. I'm gonna just go ahead and send you guys the new version every single time. And I update this thing all the time because I think of new things. I think about, and obviously I'm not a super tech savvy guy. So until I figure out how to make it in Excel, I'll have to share it to you guys. So this is gonna get updated forever. It's gonna keep getting better and better, and it's already super savvy. Now, besides these 2 things, there's also there's a balance sheet, there's an income statement sheet, there's a cash flow statement sheet, there's a owner's equity sheet, there is a debt cycle sheet, there is a pre-funding tab where it tells you all the things you need to check out before you go for funding. It has so many other sheets that you need to do, and again, it's only going to keep getting better, right? Awesome. Now, level 3. If you become a credit action taker, you're going to unlock the list of 150 borrow behaviors that I was talking about, / recent codes that the banks use to approve you or deny you. And also, these are used by FICO, right? So, if we take a look at this, this is just a screenshot of the 150 borrow behaviors, and they're filtered. It's a database. Again, it is, and then I'm filtered them right here. I created views for you guys, so that way all the negative ones, these are the major red flag ones. These are the ones that you absolutely do not want to show up on your credit report. For example, frequency of delinquency, right? Not good, right? Level of delinquency on accounts, insufficient installment payment history. Those are big major red flags, and there's different views. So, for example, if all the ones that are about lack of activity, you click that, boom, it tells you all the massive list of all those that are about that. The length of time, number of accounts, utilization, all the borrower behaviors that relate to utilization, right there. Time since, too few accounts, too many accounts, right? So that way, when you go see that, you're gonna be I got this. It's talking about my utilization. Oh, it's talking about my time not long enough. So now you know what to do. Okay. Next one. If you unlock level 4, you become a credit builder. Okay. And then I'm going to give you access to the massive list of NAICS code. Every single NAICS code is going to be on this database. Okay. This took me forever to compile. Okay. You guys ready for this? This is it. This is a massive list of every single NAICS code possible. It's going to give you the code. It's going to give you the name of it. So for example, right there, it says soybean farming. I know that is a little tough to see. I had to shrink it down for this presentation. Soybean farming. It tells you what is the size standard according to SBA. That is, what is the market cap for that industry for it to qualify for SBA products, which is for small businesses. Okay. And the size of millions of dollars per year in revenue. And what is the size standard for employees? So this is when people tell me, oh, what is the best industry to be in? And blah, 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 blah. Pick your own. Like, pick your actual NAICS code if you're actually going to go for funding with your actual, like, real estate investment company, right? And then what you can do is then you're going to be able to then understand what is the size standards to qualify for small business. So, for example, let's say you're actually a soybean farmer. It gives us a really good perspective to understand what is the market cap for small businesses, because there is, if a company tells me I'm making $2 million a year, I'll be like, bro, you're almost at the corporate level. Holy shit, you're doing fantastic. But if a business consultant tells me they're making $2 million a year, that is considered a small business to consultants, because their market cap for small businesses is 25 million. So now that gives you a big major eagle's eye view perspective of understanding the industry of that where you're trying to go for funding. Okay. It also tells you, like, some of them are regulated not by how much money they make, they're regulated by how many employees they have. So certain industries, it doesn't matter if you make a gajillion dollars, you can still be a small business if you only have one employee. Okay. So, and then after a certain amount of numbers, so for example, people ask me, hey, how much, like, how can I get corporate credit? Well, it depends on which industry you're in, how much revenue you're making, or it depends on how many employees you have. Right? So now you're going to be able to understand that. You're going to be able to see, you're going to be able to, oh, I'm in this industry, let me Google it, or let me figure it out right here on this database. And then it's going to tell me, oh, you need to be making this amount of money a year to be considered for corporate credit, according to SBA size standards. And then it's going to tell you what sector it is and what subsector. And I even put another tab over here. It's called high risk. If it's a high risk industry, according to SBA, I marked it as well. Okay. None of these ones up front were high risk, so you don't get to see that. But and over here in the corner, I cut it off. But those are my sources. That way you know that I'm not pulling this out of my butt. All right. The sources come straight from SBA. Okay, from Small Business Administration. Okay. And there is over 1,000 NAICS codes in here. Every single one of them. There's over 1,000. Like I said, this lagged my computer so bad. It's so many codes, so much data. So be careful if you unlock this level. Be careful opening this page, because it's going to be a massive page. Okay, but yes, that's how many NAICS codes there is. Next level. Once you unlock level 5, you become a credit grandmaster. Okay, and you get access to the Consumer Reporting Agency's database. Okay, with this database, you get to see every single credit reporting agency that I know of. Okay, like I said, there's a lot of them, but I have a list of over 50 of them. You know, I blocked it out so that it's a mystery to you guys until you guys decide to sign up. So, but here we go. We got every supplementary agency. Every single one that checks for checks and balances and bank accounts. Every single employment screening company. Every single tenant screening company. So if you're getting denied for employment, you want to take a look at those. If you're getting denied for an apartment, you want to take a look at these. Okay, so there's a list. It gives you the name of the company, their website, what industry they're in, their phone number, their address, and any notes on how to freeze the account, how to ask for a credit report, and any just general knowledge about the company. All right, and that's what this database is going to be able to give you. That way, in case you don't know, you can't open a bank account, you know where to go. If you can't get employment, you know where to go. If you unlock level 6, you're going to become a credit wizard and you're going to get the credit pre-approval link database. We use this every single day for our business credit clients. Why? Because before we go for funding on the pre-approval or pre-funding tab, we always go for pre-approval links first to test out the waters. And I have a database of over 60 of them here for credit cards, for personal loans, for auto loans, and for mortgages. Pre-approval links from multiple financial institutions all over America. Okay, and again, I filter them whether they're active or inactive, because sometimes the banks like make them inactive for certain periods. The name, the link, the bank, the credit product, and whether it's for personal or for business. Okay, this is massive. If you run a funding company like I do, this is going to save your butt. This is going to help you out so much. Instead of spending hours and hours like I did and years to collect all of these, boom, you can have these right there. You unlock number 7. Now, here we go. Unlock number 7. Here we go to the big boy. If you unlock number 7, you get a free one-on-one call with me. We're going to discuss credit, business, mindset, anything you want to discuss. And at the end, because you became a credit king, I'm going to give you guys a bonus offer in that call. If you guys want to take that key, I'm going to give you guys a key to your own kingdom. I'm going to give you guys a really, really good fucking offer. And I'm testing it right now with one company right now. And they have been making bank. Okay. So I'll keep that a secret for now, but basically just know this. The keys to your own kingdom. You can infer whatever that means. Number 8, you guys get a podcast episode with me, with Eddie, right? Again, and what is that? It's going to be our podcast. We're going to be multiple reels. We're going to do a collaboration on those reels, everything like that. And level 9, it's a day with me. I will fly you out to San Diego, get your hotel. We'll record content. It'll be a full photo shoot day. Record content, and we're going to collaborate on reels. So I'll video edit the videos myself, or my team will do it, and we're going to go ahead and do that and add a value. We're going to collaborate and do all that stuff. All right. Is that fucking worth it? Do you guys think I'm providing enough fucking value right now? Press a 1 if you guys agree. You guys think this is absolute fire? Let's go. Here we go. Awesome. Beautiful. All right, perfect. So I've thought about this, releasing this years ago. I always told people, if I were to release all this, I would charge like $25K. Like this is like the amount of money I spent learning this is over the 6-figure mark. Like it's stupid how many fucking fake guru classes I've taken. And I actually know some of you in here who I met at those fake guru classes. So trust me, I know that some of you guys understand where I'm coming from. I would charge an arm and a leg for all this information that I learned over the years. Like, my God, the amount of credit card debt that I got into trying to learn and understand this stuff. Exactly, Alexis, Furus in the internet. So I've always had the personal credit mastery. I always told myself, when I release a personal credit mastery course, it's gonna be like $100K. Just like how every other credit guru out there is selling it for like 5 figures. I'm gonna charge for community. I'm gonna charge everybody up in the butt. And to be honest, with all the resources I'm giving out, like, it's a lot of value. It's taken me years to complete and organize and do all that stuff. So I would always say 25K. But obviously, that's not what I'm doing. My whole goal with this is I want to prepare as many people as possible. My goal, for those of you that know me, I've said this multiple times again. I want to become champion of my people. My goal is to become a champion of my people. I want to help people out. I want to be the person that people go to for a fountain of information, and I want to give back to my community. All right. And I see every guys as brothers and sisters. I want to be able to give back to the community. So obviously, you guys are not going to give it. This is fucking ridiculous. 25K. I want this to be accessible to as many people as possible. So that's definitely not what you're paying. Like, I'm not going to be selling it for that at all. So obviously, so I wanted to make sure that it was affordable for everybody and do it. So that's why I wanted to do a one-time payment of 5K. with a one-time payment of 5K, I think it is so fair enough for everything I'm giving. So you guys, if for 5K, do you guys think it'll be that is reasonable with everything you guys are getting, everything that I've showed you guys? Is it yes, 1 or 2? Like, hey, Eddie, too expensive. If you guys can put a 1 in the group chat, if that makes sense. 5K for 5K, you guys, I can make sure that you guys get access to all the credit you guys want. You guys are going to be able to buy the house you want, the cars you want, that get the job that you guys want, because now you have good credit and they were checking your credit score before. You're going to be able to get all the money in the world to be able to go get your business, right? But obviously, that's not what you're going to pay. Like, fuck that. After thinking about it, I was like, you know what? I'm not going to give it for 5K. I don't want to do a one-time payment. I understood. Like, I've done so many courses and communities where I joined and I paid 10,000. I paid so much fucking money, and then it was not worth it right away. It just sucked. It just absolutely sucked, and I was very disappointed with it. And then after so many months, I was like, dude, they did not even deliver everything that they promised, right? Everything that they promised was not delivered, right? So I didn't want to do that. Like, that's not affordable. Like, I just said that we're heading into a recession. We're in an all-time credit card high debt. How the fuck are people going to pay $5,000? Like, Eddie, what were you thinking? So I was like, I'm gonna make it a very Alexa, we're gonna make it very affordable, right? So what we're gonna do is I'm gonna make it a monthly payment. Very affordable. And what I decided is gonna be $99 a month. Okay, for $99 a month, you get access to literally everything I have. My full credit knowledge, stuff that I paid over 6 figures to understand, to know, whether in trials or error, me getting to credit card debts, me fucking up my own credit and then having to go fix it. Like so much money was poured into all this knowledge. In 5 years of me learning this, I'm giving it away for $99 a month. All right. But because I said I wanted to make sure that $100 still seemed like very expensive. So I was like, fuck that. I don't want to do $99 a month. You know, like $99 a month, it's still like, man, a lot of people can't afford $99 a month. I remember a time where I was paying, if for all my real estate investors here, if you guys remember or post, what is it called? This skip tracing service. And I was charging me $100 a month. In 1 year, it was like that's $1,200. Like, that's still very expensive. That's $1,200 out of at my average American, like, working hard. I don't want to do that to them. That's still a lot of money. So, you guys, without further ado, I'm not going to delay this anymore. This is going to be the final price, and it's going to be a monthly payment of just $49 a month. This is less than you going out. If you decide to not go out for one night, it covers the payment. This is like you and your girlfriend. This is cheaper than you and your girlfriend going out to eat. This is you and your husband going out to eat. All right. This is the most affordable. This is going to be able to at least pay my team to be able to answer questions, to be able to provide service, and to pay for my time. And that is the best that you're going to see anywhere for the amount of knowledge and resources that I'm going to be giving out. That is going to be the best. So now, who likes that price better than the 25K or the 5,000? Who likes that price better? Yeah, let's go. Ones on the chat room. Let's go. Carrie, thank you. Nick, let's go. Awesome. All right, so here we go. But wait, I was not done. I want to provide more value to guys. All right, way more value. So here we go. I got 2 more secret offers I want to give you guys. For the 15 of you guys that stayed here until the end, for the 15 of you guys, besides like the 100 people that showed up and then everybody left, for the you guys that stayed, you guys are the OGs, you guys are going to get a little bit more. Bonus offer number 1. So I'm obviously, personal credit is just the beginning. For those of you guys that want to go even further, I'm going to be releasing more courses, obviously, because I have way more knowledge than just personal credit. Eventually, I'm going to be releasing my entire business credit mastery course, where again, I'm going to be teaching everything that I know about business credit. Everything. Obviously, 99% of it is based on the personal credit, but there's still so much more stuff that you guys got to understand for business credit purposes. Okay? So much more information. And the estimated time of when that's going to be released, it's about April of 2024. I want to try to get it right after the beginning of second quarter of this year. Okay, so that's going to be there. I want to eventually also release my credit repair mastery course, because I get questions all the time. Oh my God. But the second biggest question is like, hey, do you guys teach how to fix credit? I get asked that all the time. So I was like, fuck it, I need to release this as well. Like, so every single tactic that I know that we implement on our credit repair company is going to be in that course. Everything, literally everything that I know on how to fix credit, every single illegal method and every single right way method, right? And I'm going to educate you. Why? Because you need to know where other people, other companies are doing the 30 days or less credit repair. You guys need to understand like the whole environment. That way you guys know how to actually do it the correct way, right? So everything that I know about credit repair is going to be there. It's going to be also be co-taught with my employees, because again, they're in the trenches. You're going to get real time, like this is what's working right now. This is not what's working right now, because it changes all the time. For example, I literally just released a video on how to remove hard inquiries, and literally a few now like in just the last 2-3 weeks, we figure out how to remove them off in 2 to 4 days off TransUnion and Equifax as well. Consistently. Like that hasn't happened in years in the industry. For like 3-4 years, we have not been able to do that in the industry. And now we finally figured it out. So again, times change all the time. And this is why that course is going to be so valuable. Number 3, travel hacking mastery. Everybody always asks me, I want to learn how to travel hack. I want to do this. And there's so many travel hackers out there. I want to be able to show you guys a consistent way on how to travel hack that is consistent throughout and for long length of time. Why? Because especially in the travel hacking world, things change all the time. It's based on promotions happening right now. This is happening right now. You can get cash back right now. And it's like limited time offers like of 24 to 72 hours. Like, you don't have enough time to be able to fix that. So you need, again, a community that's going to be able to give you real time, like this is happening right now. You need to take advantage of this thing right now. Otherwise, you're not going to get into the next year, right? So that is going to be very vital. It's for you guys, for all my entrepreneurs that want to travel. Boom, that's going to be there. And then underwriting class. This bad boy right here, no one, I almost guarantee that no other credit guru out there does this one. Underwriting mastery course. I never heard of somebody else doing this. This course is going to literally teach you how to underwrite $1 million line of credits, how the banks actually underwrite you, manual underwriting for mortgages, for lines of credit, SBA loans, like all that stuff. How does it actually do? And this is going to be like almost like business management, like a business course. Why? Because this is going to literally teach you what the banks are looking at, the trends, the balance sheets, the income sheets, the tax returns, and how to become a better business owner, right? When you understand what the banks are looking at, okay? Because what I realized after working with the underwriters, it's like everything they're looking at is all the things that they're trying to prevent. They're risk for the businesses. They want to see you succeed. So they're literally going to tell you, like, I don't like this. I don't like this trend. And they have such a good view because they see so many businesses all the time. And they see good businesses and they see bad businesses. And they see what's working and what's not working. So getting the knowledge from them opened my perspective on understanding what is a good business doing and what is a bad business doing in numbers and revenue and all that stuff. And this is going to teach you how to underwrite multi-million-dollar lines of credit. Okay, so now how much am I going to be selling this for? This is like so brand new and it's costing me so much money. Me talking to underwriters costing me per hour, like lawyer fees. They make a lot of money, so the hour they charge me a lot of money. But for you guys, if you guys sign up today to the community, to the course, to everything that I'm selling today, you guys will get this for the one price of free. I'm not going to upcharge you guys. If you guys join today, if you guys become part of this community, you guys are my day one. You guys will get every single one of these courses as soon as they get released. I'm going to put it in the community, and it's going to be you guys for you to watch and free. I will release it. I'll tell you guys, hey, you guys, the credit repair mastery course is done. Go enjoy. Again, I want to provide as much value. I want to help you, every single one of you guys. get there. Okay, can I get a 1? Is that fair? Can I get a 1 if this is a good price for you guys? Awesome. Diego, Nick, Carrie, Johnny, thank you guys. Ali, thanks. Awesome. Bonus number 2. For those of you that say, Eddie, because the course, it's going to be hours of content. All right. All this information is going to be crazy. Hey, Eddie, what can I just get on a fucking call with you? I get this all the time. Can I just get on a call with you? And can you just help me out? Give me the steps 1, 2, 3, and what I need to do to get right. Can you point me into the right direction? It's a lot of information that I gotta take. I'm not a credit guy. Can you please help me out? So, for those of you who want a leg up, to those of you who just want to hit the ground running as fast as possible in 2024, I'm offering this. I normally price a phone call, or like a Zoom call, an hour call, as $1,000. Again, I'm very busy. We literally just onboarded now 40 people for the month of January for business credit purposes. So, what I'm going to be doing now, what I'm going to be offering you guys is to be one of those guys. I want to offer you the onboarding call, because on the onboarding call, we go over all the client's game plan. So if you decide to take this call, you will get, you're not going to have to wait to unlock the game plan sheet. I'm going to give it to you guys for free if you decide to join this call, right? Now, so it's an hour and a half Zoom call. It's going to be with me and my team and another team member that's going to be helping me out, because it's so much information that we go over the onboarding call that I need an assistant to just be inputting all the data, to be putting all the data in the Excel sheet while we're talking. We're collecting information and we verify this, we open these accounts and all that stuff. That way, eventually, by the end of this phone call, for every single one of our clients, I know I see clients in here. So shout out to you guys. If you guys are my clients right now for business funding, you guys are still here. You guys already went through this. You guys already know what goes through this, but we give each of one of our clients like easy 1, 2, 3 steps that they need to take in order to go for funding. Okay, we tell them what we are going to work on, what they got to work on, and all that stuff. So I'm willing to do the same thing for you, and I'm only going to do 25 people, because if I do more than this, I'm going to be way bogged down with like everybody signing up, and then all my actual business credit clients. So if you want that, if you just want to hit the ground running as fast as humanly possible, I'm gonna give you guys that offer for $250. For $250, I'll give you guys that Excel game plan sheet, an hour and a half time with me and my team, and we're gonna fill out the entire game plan sheet, every single page for you, and give you an actual actionable step-by-step plan on what you need to do personally to go and get your dreams, do everything you want to do for business credit or just credit in general. Okay. So this is it right here. Credit game plan, $250. If you guys want to schedule an hour and a half call with me and my team and get the credit game plan sheet, and we go over that and we go give you actionable steps that you guys can take in order to get to fulfill your credit goals. And then also the Credit Mastery program for $49 a month. Every single one courses that I'll ever release in there, the community, the weekly Zoom calls, and every single resource for you for free. If you guys join the Credit Mastery program, you guys can get the QR code, log in, be able to sign up. And if you guys, how does that sound? Can I get a 1 in the group chat? If that sounds great, is that something that you guys are going to be able to do? Dope. Perfect. Let's go. Okay, so now Eddie, this is all fantastic. Some of you guys may know me, some of you guys may not know me. You're like, Eddie, how do we know that besides the hour call, how do I know that you actually do this shit? Well, here we go. We already went through this. So quickly, just 3 quick testimonies so I can show you guys that I actually do this. For this first testimonial, we got a client named Jeremy. Jeremy came to us 21, 22 years old a few months ago, and he only had 1 credit card on his personal credit report for $1,000. All right, 1 credit card, $1,000. This is what we were able to get for him. So listen, the first round of funding, And we already got you $27,000, which to some people, that may not sound enough to get a business started. However, the cool thing is like, man, you've only managed $1,000 ever in your life. To be able to get 27x the amount of money you've ever managed. What are your thoughts on that?
I'm speechless. Like that's more than I could ever imagine. I would already been happy with just 5,000. You're talking about 27,000. That's like more I could have ever asked for. I'm beyond happy.
There you go. $27,000 more than he's ever managed ever. $27,000. All right, let's take a look at the next guy.
Eddie,
This guy is my boy. This is my boy, Garen Phillips. He's a famous YouTuber. He talks about stock market. He talks about algorithm investing. He's the finance guy. He's a finance guy on YouTube. Okay, so I've met him. He's a great dude. I've known him for years. And when I met him, I helped him get business credit, his credit right, and get him business credit so that he can take his video production to the next level. So listen to this, you guys.
help me out fixing my credit from 620 to like 790 to 800 within 2 months. It was pretty crazy how easy it was. I really didn't have to do much other than some text messages to his team when they text me. I think I had to send my bank statement, and that was literally it. And then I ended up getting around $67,000 worth of credit financing for my business. Yeah, it was just a phenomenal service. Highly recommend it. Anybody that's thinking about working with him. And
there you go. There you go. So there you go. So $67,000 right there. Boom. And then lastly, we got this other client. He got almost $100,000 in business credit, and this was his review of the service.
Our onboarding process.
It was super easy. I really didn't have to think much about it. All in all, I just remember getting the call and being like, hey, you're approved for this much. Hey, you're approved for this much. And then it just kind of started stacking up. And then one day I look back and I'm like, sheesh, that's like almost 100 grand in business credit. It was pretty wild.
There you guys go. So like I said, I've done this for years. I've helped so many people out, like way over 500 people. I don't even know how many people I've helped out. Like I said, in this last 2 weeks, we've onboarded 40 people already for business credit purposes. And just today, I think in the last 2 days, we've gone for funding for about 10 people already. And I'm going to be adding those results in real time. Again, personal information matters, so I got to change all that information. But besides that, we'll be giving you guys data points real time every single day on the credit report on the community. So if you guys want to join, if you guys want to be active and join a call or doing the mastery program, sign up today. Let's get you in there, you guys. Let's get started. Now we're free for Q&As. Who wants to start the first Q&A? Well, actually, let's take a look at the Q&A. So while you guys are signing up, let's take a look at these bad boys. So let me go with the first one. Melissa, if she's still here, she asks, can I dispute other address on my credit file? Yes, you can dispute every single address on your credit report. Everything, you can dispute anything on your credit report. That it is up to the credit bureau if they decide to remove it, right? Because it is the information on their system. But yes, you can definitely dispute any address on any credit report. Okay, Ali Hussein, actually, when getting to our optimal 3 credit cards, does being an authorized user count as one of the 3, or is that independent of the 3? That is independent of the 3. You want 3 primary credit cards. Again, we don't want authorized users. We want primary accounts. Okay, primary accounts. Good question. Good question. Okay. So, and again, they need to be from tier 1 financial institutions. They need to be from the best. Melissa, again, we got how to phase out my tier 4 credit cards. So with the credit game plan sheet, it will literally help you determine that. Because when you are able then to remove that, then you're going to be able to see how much does that affect your average age. The thing where a lot of people get stuck at is when they use a tier 4 credit card to build their credit, because that was the only thing that was approving them to start off. And then that becomes their oldest account. So if they close that credit card, like they're screwed. So what you need to do is to be able to build enough credit cards, like 3 to 5 great personal credit cards that are tier 1 financial institutions. And then eventually when the average age of those are so big that even if you close that top oldest one, it doesn't affect your credit score, your average age that much, then that's when you can be like, okay, I'm not applying for anything anytime soon, and therefore I can take the risk now. I can now take the little hits of lowering my credit usage, my credit points a little bit, right? So you just got to be able to make that call and see, A, are you applying for anything anytime soon? Yes or no? And B, do you have enough accounts on your credit report to supplement and hold your credit report while that gets removed? Okay. Number Alexis Sauce Drop Man, you're a beast. Thank you, Rafael. We got, what happens if you have a consumer financing company card already? Do you close it or leave it open with the balance? You definitely want to pay, because if you close with a balance, they don't allow you to close with a balance. You're gonna have to pay the balance. And if you close it with a balance, like, it's going to look bad on your credit report. So it usually acts like a charge-off account. That's a big no-no. It's going to look horrible on your credit report. Okay. So again, you first want to make sure you pay it off. You don't want any legal troubles with any financial company, whether they're a consumer or not. And then eventually you build enough good credit, like good tier 1 financial institution credit cards. And then once the average age of those are good enough to like uphold your credit report, then you can phase that one out. Ali, again, if you already have the traditional LLC structure in place, how do you redo your process to maximize funding? Should you use a separate entity for funding and a separate one for taxes? Well, so this is what I'm going to recommend. So again, this is my perspective for business funding. I cannot speak on tax purposes because I'm not a tax advisor. So again, for legal purposes, I have to say that. But if you already have the traditional LLC structure, especially as for those real estate investors, you still want that traditional structure for when you keep that structure for the time being, because it helps you in taxes, it helps you for protection liability, and for anonymity, like, so for people not to be able to find out who's the owner of this real estate property, right? So you want to make sure that your ass is covered there. The only other thing you want to do is now have a separate entity that is going to be your consulting company. Either you start a new one or you buy an H corporation, and then you set that one up as a consulting company. And then instead of sending the money over to your holding company, you pay consultation fees to the consulting company, and that's it. That's the only difference that you do. You keep that structure. The ownership and where the money goes is completely different. Okay, so I hope that makes sense. Ali, if you're still here, put a 1 if that makes sense. Again, okay, great. Thanks, Ali. Ali, again, can you elaborate on what a DSCR loan is? A DSCR loan is basically a debt service coverage loan. Basically for real estate investors, a lot of the time it would be better if the deal was qualified just based on the real estate deal by itself, not on the person's credit report, not on anything else, but just on the deal. Does it make financial sense to be able to invest into the deal? So DSCR loans is just a debt service coverage loan that helps you buy real estate properties as long as they're going to be cash flowing right away, and there's like numbers in place, and everything is checked out by the lender. Melissa, don't net 30 accounts build my PEDX score? Yes, so net 30 accounts, depending on which net 30 accounts and where do they report, they can build your PEDX score, and PEDX score is the score that Dun & Bradstreet gives you. But here's the thing, again, the banks are not looking at your PEDX score. The banks, the big banks, the major banks, they're looking at your personal credit report. So who cares? I get people approved for credits without having a single PEDX score. Why? Because that's not what they're looking at. So again, if you want to get trade lines from Uline, and you want to get gas cards, because that's actually what's going to benefit your company, like that's actually going to help you out, then go build your PEDX score. Then yeah, go get the net 30 accounts, and then go get the gas fleet cards and do all that fun stuff. But if you're a consultation company, if you're a real estate investment company, those like net 30 accounts, they're not going to help you. Like there's no need for you to spend money there. So don't do that. So don't do that. That's not going to help you out. All right. So again, the PEDX score doesn't help you out to get business credit at all. Okay. That's not what the banks are looking at. So I hope that was able to I was able to answer all of those. Awesome. Awesome. Does anybody else have any other questions? Like I said, I want to promise you guys, I'm not going to leave this until I have answered every single question. So, Lexus, Ali, Bob. By the way, this is my first time doing a webinar or doing some sort of presentation like this. Can I get a 1 in the group chat if I did a good job? Like, you guys feel like, hey, the 10 of you guys that stayed, the OG, then I love you guys. You guys are the best. You guys are amazing. You did amazing. Thank you. I appreciate it, you guys. Man, I hope I did amazing. My voice is hurting. I love this. I love this. Thank you guys. I appreciate it. This is the type of value that I like providing. So expect this. If you guys decided to join, if you guys get on a call with me, this is the type of value that I provided with you guys. So again, if you guys are ready to rock and roll, let me see how many people have joined. All right. Let me refresh this by the way. All right. There you go. We got some people in here. Let's go. Awesome. So if you guys, thank you guys for joining. Let's keep going. Let's go. Alexis, Ali, let's all join. I really want to be able to provide as much value to you guys. Want to help you guys out. And again, this community is only going to keep getting bigger. It's going to keep getting bigger. I'm going to be running ads on. I'm going to be probably doing this like once a week. I want to grow this community as much as possible. This is going to be a side project. I make all my money doing funding and credit repair, mostly funding. I barely make any money on credit repair. It's not really lucrative. But the funding is where I make all my money, and it's where I get the most amount of knowledge and inside knowledge and everything. So you guys, you guys are going to be getting so much value out of that, because I am actually a person that is doing it, like doing the funding real time every single day in my company. So you guys will know that you guys are getting answers and information from somebody that's in the trenches every single day. So awesome. All right, so I wonder, here we go. Let's get some people in here. I've never done a webinar, so if I click this, Alexis, put a 1 in the group chat if you can talk right now. Awesome. Let me. All right, Alexis, I think you're going to be able to say something now.
Mic check 1 2 1 2.
There we go. By the way, you guys, this is my boy Alexis. This guy is the other owner of one of my podcasts, the Only Points podcast, and this guy is a credit genius as well. He if anything, I would want to partner up with this guy to do all the travel hacking stuff. So Alexis, how you been, man?
Well, everything's been going good, got some works in the plan, but yeah, everything's been good so far. How about you?
Perfect. Dude, I'm phenomenal. As you can see, man, you said overvalued, right? Overloaded.
Yeah.
Overload.
Yeah, I mean, one thing I do have to say is that whenever you do like these kinds of webinars, presentations, panels, etc., those kinds of things, I can definitely say that Eddie, you provide overvalue. You provide like so many things that you like most people like won't even know like why it's important, but you do it anyways. So like that's why I say it's value overload.
Yeah, no, I appreciate that, man. Thank you. I really tried to give my all, man. Like like I said, you guys, like this course, it's like every nook and cranny, that every single angle that you can possibly think about credit is gonna be there. Everything that you can possibly think about is going to be there. I've seen it all. I've seen every single industry has come up to me. I tell people this: if you meet me in person, one of the things that I'm going to try for you guys to do is to surprise me on an industry I've never heard about. Like there's hardly any industry that I've never heard about, because I literally hear about it all. Anything new, because again, they all come to me. They all want business credit. So, and then I have to figure out how to get funding for that new industry that hasn't existed before. And so I've seen it all. So but yeah, man, I much appreciate it, Alexis. I appreciate you showing up and providing value and being in here. Thank you, man. I really appreciate it, bro.
Yeah, of course. Thanks for sending me the link.
Of course. All right, let me get somebody else in here. Let's see. We got let's do this. We got my boy Nick. Nick, can you talk? Put a 1 in the group chat, you can tag. By the way, you guys, Nick, the number level 9 in the community where I fly you out, we record content, all that fun stuff is gonna be done by my boy Nick right here. Nick is my business partner for my social media marketing agency. He is a Hollywood producer. He has produced a lot of content commercials for big major corporations like Salesforce. If you guys are in business, you guys would understand what Salesforce is. Nick, can you talk right now? Put a 1 if you can talk. Oh, okay. He's probably video editing some stuff right now. He's probably working right now as well at the same time. So okay, got it. So I appreciate you showing up, man. I appreciate you can joining and supporting, man. We got our boy Rafael Ferrer. We got 2 Rafaels in here. Silva, what's up, you guys? Thank you guys for joining. Carrie Grant, I see that you joined the community. I appreciate it, man. Thank you so much for joining. I appreciate it. It's gonna be super worth it. Trust me. I'm pretty sure you're already getting access to the credit database already there. So you're gonna see in there that you have a sheet, your submission link and everything. So don't be afraid to introduce yourself in there and go in there. Ali Hussein, Ali, we gotta definitely talk tomorrow. So any other questions, you guys, before I end the call? Put a 1 if you have a question. If you don't have a question, I'm gonna wrap it up. It's been a long day. It's already been 3 hours. Not long enough for me, but I know I don't want to keep everybody. All right, you guys. Well, with that being said, I'm gonna conclude. Thank you guys so much for joining, you guys. I appreciate it. Thank you guys for joining. Thank you guys for signing up. We'll see you guys next time. Peace out.